Okay. Okay, we live. Let me let this thing marinate real quick. Okay. Okay. Respect to everybody that's coming in. Respect to everybody that's coming in. This is open panel. Had a meeting that I had to attend to. Pardon for me being late. But let's be able to talk about stocks, real estate, business credit, preferably, lending, um, underwriting, certain type of things that involve getting type of loans. We can all talk about that right now, but I'm gonna let everybody's coming in get settled. People that's coming in, this is an open panel. If anybody wants to come in, if anybody has any questions, please feel free to join up. Be able to get everybody's question pretty much heard. But pretty much let's be able to talk about certain stocks. We got gaming stocks that has pretty much been soaring due to the fact of NFTs, and you got gaming. How can I put it? Gaming conferences back in motion. You got Super League Gaming SLGG, and you got CYBL when it comes to government contracts. Department of Defense pretty much gave CYBL a government contract, which that is actually pretty much due for a bull run. But for everybody that's coming in, thank you for coming in. We could be able to share my screen real quick. Because we got another ticketer that pretty much people have been talking about is Senses, SENS. Short squeeze opportunity will be CLOV. AMC, pretty much another short squeeze opportunity. Got plenty of short squeezes that's pretty much going to be due. So let me share my screen. So let me do this real quick. For all the people that's coming in, thank you. Let's be able to discuss Senses, because since everybody's talking about, we're going to really see and test out how people are pretty much getting ready to transition from either a crypto bull run to either getting back in line when it comes to stocks, which, to be honest, a lot of money that didn't go to stocks went into crypto. Plus, you have China cracking down on crypto, leading to a pretty much a hemorrhaging bear market, which it's not fair for everybody that's pretty much looking for another rise, because there's a lot of people that still bought at the height of the bull run. So we had 54,000 in Bitcoin. Price crashed to 35. People want to go back to 42. I think people are pretty much kind of trying it when it comes to expecting the market to just all of a suddenly just spit out profits without understanding what specifically can be used. I try to share my screen. For some strange reason, it's not working. So pardon the mechanic issues. But for all the people that's coming in, we got ticketer SENS, ticketer IDEX, another ticketer CYBL, Super Gaming League SLGG, NFT plays is pretty much still hot, but something that people should be able to hold on until it's a dollar is ULUS ticker ILUS. Now that would be the long-term hold that people should be focused on what to be able to put money in month after month. And then you have a lot of mergers coming in, but CYBL is pretty much half a penny that I'm going to hold on until it's 10 cents due to the fact that it did got approved for the Department of Defense. And the Department of Defense gives the funding to the company, which it's pretty much, they would consider this a micro cap company, but still the Department of Defense gave the contract out. It's an opportunity for people to be able to say, okay, let me get in position when it comes to buying this stock before everybody gets on it, before the media gets on it, and pretty much take everything all how can I put it, hyperbolic to the point where people can't afford it. We try to be able to get to those before that people pretty much get onto it, but it's Cyberlux. So that would be ticker CYBL. Cyberlux Corp is the name of the company. They pretty much got a contract with the National Guard Bureau providing lighting solutions to commercial, government, and military organizations. So that's pretty much how they got their access to pretty much getting funding, is because of their ability of their management have connections with the government. Their management pretty much knows how to be able to operate when it comes to dealing with government parties. So they have the experience there fundamentally that a lot of companies are lacking when it comes to getting approved. Another government approved stock that we mentioned was ASTI that blew up 100% a couple months ago, but still people should hold at $1 hold, long-term hold. WDLF is another swing term trade. AVVH, that's something that people should be able to research as well when it comes to stock twits or any type of due diligence that people use to subscribe to figure out what's going on when it comes to the due diligence. But I'm gonna share my screen, and CYBL is something I'm gonna hold on until it's 10, 15 cents. And it can easily go up due to the fact of the government contract. As soon as it has profits coming in where they can be able to have people being more interested, then, the more dollars that fluctuates in. Respect to everybody that's coming in. Hola to Morena. Anybody that's the wants to join, please click on the link. And if anybody has any type of questions that they want for me to be able to answer, you can be able to click on the link. Anybody wants any type of discussion when it comes to either the markets, their opinion on the markets, but we're pretty much going to have a long live stream today. This is going to be a longer live stream. Am I choppy? For all the people that's listening in, am I choppy? Am I coming in kind of choppy? Because my internet connection was running kind of wonky, but we have to figure out what would be a solution that people would like to be able to utilize, because people would say, well, if we have a recession, what do we do? Well, inverse ETFs, when it comes to profiting off of downturn, could be one solution. People that are pretty much getting puts, pretty much shorting the market, I think people should have a mixture of both bonds. If bond yields go up back again, which bond yields kills tech stocks. I hope people understand the adverse correlation when it comes to that. When bond yields are up, tech stocks get murdered. Tech stocks always gets murdered when it comes to bond yields raising up. But people should be able to get inverse ETFs, try to bet against certain type of industries. There's people that think that crypto is not a good hedge against inflation. There's certain people that will tell you it is a good hedge of inflation. Other people will pretty much just say, well, we'll just watch and see. But having inverse ETFs, you make money as soon as the market is in a downturn. As soon as the market make a downturn, you can make money on the flip side when it comes to getting in position. Because to be honest, everything that's going to have involved with inflation or interest rates, loan companies are going to win because they can be able to start charging people interest, and they make money and profits off of the interest, not necessarily processing you a loan. So the more people can be able to understand what the market since doing, then a better type of defense strategy can be used, because you have a lot of people saying corporations is buying up their houses over asking price. Other people say that's people misleading people and misusing data. Now, both can be true at the same time. They have lumber prices pretty much skyrocketing for the past couple months, leading to prices of homes skyrocketing, which, pretty much people should understand of when to be able to say no. Because if they buy up assets where it's 300, 400,000 put in, they don't even have to put in a lot of money when it comes to renovations. They just be able to put enough money and to have the mark of 500, 600,000, and within 2 or 3 months. That's because the comps change. You got a lot of comparative sales pretty much getting boosted off of all this buy up into this area. Respect of everybody that's coming in, please like the video. If anybody wants to come up, please click on the link. If anybody wants to come up, please click on the link. If anybody wants to donate, sign Mr. Perfect 23G. If anybody wants to get in contact with me, creditbuilder475@gmail.com. So pretty much everybody has to understand of what the market would do when it comes to news. Because 2023, 2022, they say that interest rates are going to raise up. 2022, they say that taxes is going to be able to increase due to a lot of budgets that needs to be funded, and also green energy type of initiatives needs to be funded. So you have to be able to understand of when it comes to green energy, lithium, graphite, tin, titanium, you have gold, silver, coffee, pretty much commodities and rare earth materials pretty much should be people's focus. And shipping stocks has increased the highest, because we had a issue when it came to a canal that pretty much was blocked, and shipping demands has literally went up. Logistics, so pretty much anything that's in shipping, trucking, logistics is going to get a boost due to the fact of demands. Economic demands is pretty much saying that we need to be able to get back on a logistical forefront where we can be able to fulfill orders. We can be able to make sure that our supply chain is running correctly without any type of inconvenient bottlenecks or any type of errors. So you got people that's understanding of two things: market sentiment, buying a lot of stock, and understanding of how to be able to exit. I tell people if the stock is 5% down, 10, 15% up, that's pretty much the metrics of how they should be able to go at things. I think more and more people need to focus on how to benefit off of a downturn instead of being the person that's trying to rely on getting on the upside. Because if we have a bear market that lasts, even though the market did very well today, it opened with 500 points. So actually the Dow Jones did good today, but still you have all these mood swings of the market pretty much going left, right, topsy-turvy. People should have plenty of fun when it comes to buying the dips when needed to. Uh, uh, I'm not a big fan of blue chips due to the fact that the upside and the swing of it is not, it's not worth my while. But if you have to do blue chip, I would say Apple stock is still a buy. Ford Motor Company, GM, American Airlines, um, Exxon Mobil. I told people about the gas place of Gush plenty months ago. Gush is pretty much oil and gas. Brill, stock ticker or Brill, if people want to get involved with something that's actually oil and gas and still cheap with some upside. But hopefully my screen can get back going so I can show you of CYBL. CYBL is pretty much something that people should focus on buying. Not right now, but waiting for a dip because it did went up considerably once it has the news of government contracts. But this is one of the stocks that pretty much has the Department of Defense granting them a defense contract, and it's literally 0.0048. Up 10% today. Durham, North Carolina. Hybrid lighting technologies, and they got approved from the National Guard when it came to their defense contract. So 6 months period, it's literally just moonshotted. But from a month standpoint, from the previous month, it's still managed to blow up off of news, and it's not even really fully blown up because it's not even at a penny yet. But I'm gonna hold on to this until it's 10, 15 cents, take profit out, leave 30% in. So just if it does blow up even more, you can still be able to get some profit on the track of, okay, now the stock has blown up. Now you have government contracts approved. Now you got people from Twitter looking in. You got people from, how can I say, stock twits. You have a lot of people pretty much getting involved and flooding into it, where the volume increases, where it can go from half a penny to potentially 20 cents, like GGII was, where it was literally under a penny, blew up 13 to 15 cents. And now it pretty much took a huge dip at 2 cents, but still, people that missed out on GGII, this company has an actual product that you can visibly see. It actually sells products at weed collectives and also does partnerships with other weed brands as well. So people should understand that if the company has the ability to be able to show you the product openly and working on becoming profitable and sending financials, then that's pretty much what's needed. Okay, Wadner. Well, shalom, Wadner. Shalom. It's been a minute. Oh no, I take it. I take a break of these things, and I had a death in the family, so that's why I was pretty much out of commission. But salute to you, Wadner. Salute to everybody that's coming in. If anybody wants to join in, please hit the link. Please be able to figure out what type of strategy that you are involved in, or what type of strategy that you need. I will be able to create a Discord link. I will be able to send people that already booked the consultation some more dividend charts to be able to look at, so people can be able to earn while holding and look at other type of plays while they're pretty much getting a yield dividend of 6% a year. So people need to be more of the mindset of dividend hunting, figuring out what are the yields, companies, fundamentals, stuff in that stuff in that realm. But Sense's ticker SENS is going to be the second ticker that we're going to look at. Because Super League Gaming is like $3, which if you want to get into something that's gaming, I would say get into the sports fantasy like DraftKings and stuff like that, because sports is going to be coming right back around the corner. Gambling is going to be at all-time highs, and people are going to be spending the most. And DPLS is another play that people need to pay attention to. Smooth, respect to you. Dwayne, respect. Anybody that wants to come up, please come up. For anybody that wants to get in contact with me, you can be able to hit up these two emails, creditbuilder475@gmail.com and business development 1324@gmail.com as well. But the markets have to be able to figure out of what is going to, well, really the people in the market influx a lot of capital and cash back into the market, because I'm going to show you Senses, then we're going to look at the overall Dow Jones to see all the opening and closing and midday activity. Okay. Biotech company, headquarters in Maryland, founded in 1996. President Timothy Goodnow. So they pretty much have 200 employees, down 6%. In the past month, up 61.2%. 6 months. The past 6 months, it literally, so it was from 90 cents, blew up to $5, consolidated, took a crash downward. First crashed, second crashed, consolidated sideways, just to go up vertically 61% in the past month. And this is a biotech company that pretty much had news when it comes to FDA approval and patents. You know, patents is bullish activity. Anytime where you see a stock that might go through a merger, that is a bullish opportunity as well. Of either merger, custodianship, increase in earnings, that's all literally good news. That's literally news that people look at, and the stock literally goes up 10, 20%, depending on the volume. So people need to look at mergers as bullish news. So let me type in all of the stocks that I went over through. So merger equals bullish news. Merger is bullish news. Stock ticker CYBL. CYBL is definitely something that people need to research on. So everybody must do their own due diligence. Everybody must do their own due diligence and be able to figure out what is their comfortability rate. But CYBL SENS. Plus, you got SLGG. So that's Super League Gaming. Super League Gaming. Oh, yeah. And also, you have Retro Reality. That's another bullish market. Oh, I put SLGG. It's SLGG. Respect to you, Lawrence. Respect to you, Lawrence. Shalom. Shalom. Anybody that's coming in, this is an open panel. So anybody that wants to be able to ask any type of questions, it's going to be a longer stream. This is going to be a longer stream, so I have plenty of time to answer people's questions. Anybody that's coming in, this is an open panel. Anybody that has any questions that they need to be answered priority-wise, before you book a consultation, always hit up the panel before anybody makes a move, so you can be able to get direct questions answered and to be able to prick my brain without any type of unsureness or unclarity. Well, any type of unsureness or any type of clarity that you need to be provided to you. You can be able to ask it now. So please, anybody that wants to come up. We're going to look at the Dow Jones, and we're going to be able to see what is going on when it comes to today's market. People should always look at if the company has any type of mergers happening, because that's bullish news. Anytime when you hear merger, you should perk up. Always perk up, because that's bullish news. That's literally news of people coming together and managing to be able to consolidate what they need. Kelly, respect to you. Wadner, you need to book Wadner, you supposed to have been book a consultation with me, dog. I've been had plans and plays ready for you, dog, especially you're in real estate. If you're in real estate, Wadner, you need to be contacting developers in those areas and figure out what they want. Lock up the contracts by getting involved, by contacting them people. Set up a cash offer opportunity and send it to the developers where people can be able to benefit. Kelly, can you turn on your camera before I let you on? Because I don't know if that, because I got trolls, so I got to figure out who is who. So Kelly, in the background, before I let you on, turn on your camera so I can be able to see. Okay, you can turn your camera off. I'm just checking up on who is who. So you can turn off your camera, Kelly. I'll put you on. Lawrence, respect to you, Lawrence. Definitely, people are starting to be able to see my streams now. But
how are you doing?
Everybody should just. Everything is well. Everything is well, Kelly. Everything is well. We're just trying to be able to craft up a plan where people can be able to benefit off of these mood swings that the market goes through. So,
dude, you know
I
what's so
gotta
crazy?
share my
Just
screen real
10 minutes
quick.
ago, I just put right before I didn't even catch your live. 10 minutes ago, I just put $100 into AMC, which I know isn't a
Yes.
lot, but you know, I'm just starting to do this. So I'm just going off a
Well,
whim.
AMC is good for short squeezes, but with short squeezes, you also got to understand what is your risk tolerance? How much are you willing to lose, and how much do you expect to gain? Now, AMC stock has a lot of people pretty much buying it where it surges up, where you might see a $30, not a $30 gain, 30% gain, 50% gain day by day. And that's because you got corporations that are trying to short AMC, but with shorting, you got to cover your costs. So that means that if they borrow $1 million to short the stock, meaning that the stock goes down, then they have to put in $1 million in input to buy back the shares to avoid unlimited losses. So that's why AMC can go up, because of people saying that, oh, hedge funds are trying to short this. We got enough people, we can be able to buy this stock, where it goes up and they have to keep buying it to avoid the loss. So AMC is a swing term trade. People think it's going to go to $500 a share. I think it can go up to 120 to 140. Rough estimate.
This is the thing, and that's why I wanted to jump up here. And I know $100 isn't a lot, but I just don't have a whole bunch of money to throw around everywhere. I look at it like almost like, what can I afford to just put out and be gone? If you know what I mean,
Well, the certain plays that I mentioned, like CYBL, that's literally half a penny. And I'm going to hold on to that motherfucker until it's 10, 15 cents a share. So if somebody would put in a $40 into a CYBL, not recommending it, just saying if they did, I would recommend $40 in getting their TD Ameritrade account or their E-Trade account, putting in $40 either every month. If they're pretty much funds running very tight, $40 every 2 months. But still, it needs to be a fixed dollar cost averaging, because this is getting approved by the Department of Defense. They literally approve funding to use their company. Well, the National Guard pretty much used CYBL to be able to use their company for their lighting, because they need lighting when it comes to their equipment. So they'll use that company. So I'm going to hold on to it for a year. Now, Kelly, if you're going to put in something, $100 ULIS, a stock ticketer ULIS is something that you have to at least put in half of that amount.
Okay.
So don't stress the fact if you have $100.
Well, okay. So my question is this: so if I take another 100, because I plan to put 200 in to something, right? If I take another 100, you're saying what did you just CY? I didn't remember it exactly.
CYBL.
BL.
CYB. That has the Department of Defense give them process and approving on funding. Because when it comes to what I invest in, Kelly, if it doesn't have any government contracts, if it doesn't have any political connections, because SXOOF is Paul Pelosi Jr. We all know what family he comes from.
Mm-hmm.
But that company has government funding as well. That's St. George's Eco Mining Company. So SXOOF is something that is a long-term hold, due to the fact that he has the ability, his family has the ability to write policies to be able to give government funding when it comes to spending bills, any type of potential stimulus package, any type of pretty much anything when it comes to the government rebudgeting or budgeting certain stuff. His company could get funding due to the fact of it being green energy, electric vehicles, charging stations. So he takes advantage of that niche, pretty much the Build Back Better plan. Most of these stocks is pretty much either Build Back Better friendly or just green energy. So that's why you would have companies that blow up 100, 200% since inauguration day. That's because of the aspect of them getting funding approval, them having access to government.
Oh, I'm gonna have to go and learn all of this. And I hate numbers. I swear I hate numbers. My son
I
just
understand
hit
it.
me. Uh-huh.
Oh, okay.
No, yeah, my son
what
just
trading?
told me. Look, I don't even really know what I'm doing. Okay, my
What
son.
trading platform are you using?
Robinhood.
Okay. That's the only thing I need to know.
Okay, is that bad?
Robinhood is limited. Like TD Ameritrade is what I tell people on the channel. TD Ameritrade, E Trade, those type of. Don't get me wrong. Robinhood is good for if you're doing, how can I say, call options. You can invest in certain cryptos on it, so it does have its ups. But TD Ameritrade, E Trade, I used to do Fidelity, but Fidelity got annoying where they start, pardon me, freezing accounts. When they start freezing accounts when it came to like penny stocks, but we're going to look at the Dow Jones. So far, so good. So the market is up, everything is green, everything is pretty much plush. We're gonna look at my screen real quick.
See, I'm gonna have to learn all of this, and I'm just disgusted thinking about it. I'd rather have my son call me and say, "Hey, mom, put this money here," but he doesn't really get into it either, So I guess I'm gonna have to just start from the beginning and learn. Because it's
Well,
basically, I guess I kind of
only thing I
perceive
could
it like.
say,
Go ahead.
no, finish your thought.
It's for me. It's like I try to look at it like, okay, I'm at the casino.
Yeah, people do actually come in with that type of mindset, which I don't half blame them. But today the market is up 580, not 580, 558 points of today. So pretty much it started off roaring, it shooted up, and the market went sideways. The past 5 days, people see the past 5 days, it was a dip, and that's because of the Fed. So these days right here that I'm highlighting, these days that I'm pretty much here highlighting, it's literally the days of the Fed chairman saying that they was going to raise interest rates, and the market took a big sell off just to buy back in at the dip, and the market rose up again.
This
So
is
pretty much it reacted. It reacted towards of Jerome Powell, the federal chairman, the big federal chairman. Then we got the chairman in St. Louis that's going to give some economic data reports. But literally, that's the 6 month. So since stimulus has passed, the market, well, Dow Jones has been up 4,000 points consistently since
now
Biden
you
Harris
make me
signed that stimulus
interested.
package.
You make
Hmm?
me interested in the other one, the first one you were talking about. Like maybe I should put some money over there.
Yeah, yeah, that's why AMC is good. Really, it's for people that have thousands of dollars already because they literally put in $10,000 on AMC, cash out 30,000 just to get back in it, to put another 10,000. So this is pretty much the Dow Jones market from a
But see,
year's
I don't
time.
expect to do anything with it right away, if you know what I mean. I don't expect to um, you know,
Well,
maybe 5 years, but I don't expect to touch, you know what I mean? I don't expect to touch it.
well, well, long term holds that I would say that you should be involved in would be Neo. Like Neo, let me do something real quick. But this is the Dow Jones's chart from a year. So literally, these were the dips, 25,000 points, shoot up to 33. Dow pops 600 points as the market rebounds from Fed induced sell off. Stocks rebound as Dow Jones gains more than 500 points. Dow surges more than 500 points as Wall Street rebounds. So this is all literally of people saw that the chairman saying that we got to do certain type of things. Oh yeah, and Dow Jones surges as Bitcoin plunges on China crackdown.
Yeah,
So
I was wondering about that. People keep telling me Bitcoin, Bitcoin. I never bought it though. As long as I've known about it, I've never put any money in it because I felt like if you didn't get in right away, but maybe there is something to it. I don't know. I'm leery with that.
Well, the volatility is extreme when it comes to Bitcoin. So Bitcoin can go up 60% in one night, and it can literally have multiple days of it crashing 100 days, 100% in a matter of days, because it has no way of you controlling it. There's no type of how can I say, some type of safeguard to be able to say, okay, we want it to stabilize at this price. Problem is, you're gonna have people from China, Russia, pretty much buying and selling, huge sell-offs like this China crackdown. I don't know what would be their plan B, because the people in China is still going to use it as a exchange of currency, even if the government cracks down, while
But
Russia
kicking people out the
already is open arms of crypto.
but they
Mhm.
kicked people out of the country, literally.
Uh, well, it's more a crackdown on the systems. They probably jailed them, took their systems, snatch up and confiscate them to be able to figure out what do they know, what information do they have access to, what do they know, how can we be able to get access to it, and just pretty much just debo them for all they shit. That's literally
That,
it's literally what the Chinese government's get down is when it comes to
whew.
that. So, uh, yeah. So you have people that's pretty much figuring out what next when it comes to this. So they're trying to either say, do they create another coin? Do they create another coin to pretty much just say, well, we're just gonna sidestep that one because they're pretty much focused on that one. So let's see if we create another one, or are they gonna take out loans to be able to avoid a taxable event? Because really, I think the future when it comes to if people want to get involved in the crypto niche would be either, how can I say, what they call DeFi tokens. So that's digital finance. So say if somebody has $1 million in Bitcoin and they need to withdraw it, but they don't want it to create a taxable event, they would get a loan against it. And to avoid a taxable event, the loan, they probably take out 90% of equity. And they take the loan, buy either more investments, real estate, preferably real estate, other businesses, and use the cash flow from those businesses to pay back the loans month after month or year after year over year. My bad. But
So now you're doing what's this credit builder?
Kurt, that's my email.
That's your email.
That is
Okay.
my email. That is my email. So if anybody needs to get in contact with me, that's going to be the method of contact, the method of
I'm
communication.
gonna
So,
I'm gonna
mhm.
hit you up. I'll hit you up on that email. I've been working on that too. The only thing that kind of killed me is they sold my school loan,
Mhm.
and for 3 months I didn't know. Do you know what that did to my credit score?
Oh man, they must have
Assassinated it.
plunged. Uh, uh,
Oh my god. And I've been working. Oh, yeah, that was ugly.
so when it comes to that, I do have a credit repair, not a company that I own, but a company that I do go through when it comes to what I need, and they can be able to delete child support. They can be able to refinance student loans. They can be able to add certain type of trade lines onto your credit to be able to boost it, certain type of deletions, whatever. Pretty much, it would just have to be you understanding what are you trying to do. Are you trying to delete certain stuff to get funding, or are you trying to build up your personal so you can build up the business? Because the business credit, you can be able to use more of your credit. You can be able to delay certain payments. With business, it's more flexible than personal. As with personal, it's net 30. With business credit, it can be, I've seen people that paid back business credit cards in 70 days. But still, there's a company that can be able to refinance student loans, deletions of child support, pretty much a credit sweep. It's really it's that's the term, a credit sweep, a full credit sweep, adding primary or authorized user trade lines. That would be like the method of you getting funding and be able to at least move, at least breathe a little bit, at least, because that's sad how somebody can get their loan sold without even not even being informed, and it
Yeah,
crashing somebody's credit 700, not from 700 to 500 or
that's
700 to 620.
exactly that's exactly what it did. I was
Mm-hmm,
almost to 700 because I had been working on it. And then
mm-hmm,
it dropped it all the way down to 5.
mm, mm,
And I'm like, oh
that's
my God. So yeah, that was
that's
pretty
bad.
heartbreaking. Yeah.
That's bad. Now, anybody that's coming in and anybody wants to join on the conversation, anybody has any questions, please hit the link. This is an open panel. I'm open to accept anybody's questions or challenges. 'Cause I do have people that pretty much say, well, real deal, I think you're being too optimistic on the market. I think the market is just going to take a big dump. Well, please tell me your solution for the people that do believe into that. I think it's the market is going to have periodic crashes, but it's eventually going to bounce back. But with the credit situation that you was talking about, you have a lot of people pretty much used all of their any type of stimulus money to pay off loans back or any type of credit cards back. They use that money to pay off old debts. Debt collection companies is pretty much benefiting off of that, but you can pay off old things and still the credit does not boost.
Well, see, and that's the other thing. I have a medical bill that's on there that my insurance
Mm,
should have paid. So I had to call them again, tell them to send me the bill. This is the second time to send into the insurance company for them to cover. But other than that, the only other thing on there is that school loan.
mm,
But it's getting
mm.
paid monthly. So it's not I do see a little bit of an increase every month, but it's not enough. It'll take me forever to get back to 700 if it's just going to
Well,
increase slowly like that.
well, yeah, it does increase slowly. People would tell you, well, there is a solution. Um, there's people that pretty much have it deleted. They get certain stuff deleted, which they got a very great credit repair company to be able to get deletions. Now, the company that I do go through, he could be able to make up some deletions. Other people would say get a CPN, which if you're gonna get a CPN, you're gonna have to need several things for that to work. You're gonna need a different address. You're going to be able to need to first try merge it, getting everything valid so it's pretty much registered publicly, putting some trade lines on it and building up the CPN in 4 to 6 months of 50,000 in credit while working on their personal and try to work up their personal to get the same as well. So there's people that do credit sweeps. If you would need any type of references, I could be able to give you any type of references. But
Yeah, I mean,
personal,
people have sorry, there's a little bit of a delay.
okay.
People have told me, you can get with this different company, and I'm like, okay, yeah, but the money, you know what I mean? It's like if you only have a school loan, you
Mm,
know, what's going to be the point, because they don't go away. The best thing I could do is, I guess some people say, I mean, it's $10,000, but some people are saying you can get 10,000 taken off. I don't know how, but I've heard that from a couple of people.
Well,
I mean, but
only thing I don't know. Only thing I know is people either refinance out of it or get more trade lines where their utilization is bigger. Their credit limit or their credit limit on their credit history is bigger by getting either trade lines, primaries, auto primary. Because the dude that I go to, he could be able to get people an $80,000 auto primary. People, if they're smart and entrepreneur minded, they'll take that auto primary and pretty much get something where probably a BMW Beamer, rent it out rent it out on Turo, get $3,000 a month on the Beamer, for $3,000 to $4,000 a month on the Beamer. Now this is good for the people that I know in the channel that does car rentals in that niche where they can utilize a auto primary loan, get something that people are ooh and eyeing about, rent it out 3 or 4 years, pretty much cash out $60,000 in liquid off of just leveraging credit primary loans and going to CarMax, because CarMax is actually one of the car dealerships that people go to when they do have their credit approved or do have a CPN of some sorts. But it's sad because it doesn't come off. You cannot file bankruptcy to be able to
no,
say,
it
well,
wouldn't. That would be the silliest thing for me. Like file bankruptcy for what? Well, a $600 doctor bill that is going to get paid from the insurance and a school loan that can't go anywhere.
well, people try a lot of ways how to try to finagle something. People actually people actually try to scramble when it comes to ideas of a solution. But
Yeah, no, I get it.
me personally, I don't have student loans. So
No,
all
you know
this is
what?
pretty much
You're smart, and I made it so my son didn't have student loans either. I got all grants for him because I figured out after I did it what a pain in the ass it was. So I made sure
okay,
he didn't
okay,
have any loan debt.
okay. The broke genius. The broke genius. Turn on your camera, big homie, so I can know it's you. Cause I had a lot of
Yeah, I
trolls.
got
Okay, you can
porn
turn off the
mocked.
camera. Yeah, man. That's some sad ass shit, man. People willing to do that.
Mhm. I don't know
But let
why. I
me
just clipped it and re-upload the video. And no harm, no foul. But they thought they were doing something, I guess.
okay. Wow, I can't be able to click on. Hold on. Okay. What's going on, what's going damn, I'm about to repeat what you're saying. What's going on, bro genius? How's Chicago treating you?
What happened? Did he fall off?
What happened? Do we have a
I
connection
don't.
problem?
I don't see him anymore.
Hmm. Hmm.
Maybe he'll
That's
come back.
weird. But people need to figure out what is going to be their plan when it comes to removing off debt, because you got a lot of people thinking that the credit bureaus is going to get canceled and they're going to create another credit system, which I don't know.
Includes a
Maybe.
social score too, right?
I don't know what to say when it comes. Now that
That's
I am not for sure. Now that I am not for sure. I'd been lying if I said yes. I'd have been just outright lying to the people if I would have said yes. But I don't know, man. It's a lot of sudden changes. A lot of sudden changes that people are not going to be ready when we are fully opened up and we have pretty much the training wheels pretty much cut off, where they're saying no more stimulus, no more government aid. Pretty much we want the economy to hold its own, and to see what can they do without having these programs.
What's going on,
Okay,
everyone?
I added.
Hi.
Okay, respect to you, man.
Yeah, I was hearing you guys talk about uh like student loans and debt. One of the things that I'm trying to do with my student loans is I got a short term plan and a long term plan. So the short term is to basically pay monthly payments, but the long term plan I'm gonna try to use real estate to offset my student loans. And I learned this from a real estate broker years ago. He basically bought a piece of property and refinanced the property into a student loan and sold his property, and he got out of the student loan. So that's one of the things that you could do. You could either buy a property, build up equity in it. You could even possibly even buy property with already equity on it, where you basically own more of the property than what you have to pay off on the loan, and then you basically refinance the student loan into the property.
But
Um,
how do you, one question though, how do you buy the property if your credit is
oh
shit?
yeah, you definitely got to rebuild your credit.
Yeah,
Yeah,
yeah, yeah.
or I was gonna say also you could buy, if depending on your area and your affordability, you could buy a property cash. That's what I'm actually working on now. And fix it up and then sell the property or get a mortgage on it and refinance the loan. So those are a couple options that you could do. A lot of people actually they use their line of credit to their equity. Basically, it's called a HELOC. They take their house's value, the equity in it, and they refinance their mortgage to pay off all of their debts. It's quite
Yes,
common, actually. It's called a HELOC.
Okay.
So
home equity line of credit.
yeah. Now the thing is that you still have to have the approved credit, even like if you fix up a house and you buy it cash, the bank won't give you any money until you rebuild your credit. So
Well,
either way, it goes back to the same thing.
yeah.
Or you could sell the house and it's you get the cash value of the house. And if like myself, if when I once I fix my house up, I don't have any mortgage on it. I get all of the cash value. I could just basically contact my loan provider and work out a settlement, and I cut them a check, and then I'm out of the student loan balance. Otherwise, if you wanted to like put it into your mortgage, you could just once you got the approved credit, contact a mortgage broker and get the loan value of your house, and just cut a check to the student loan company, and then you'll just basically have a mortgage on your house, and you could do whatever you want, rent it out or put it up for sale or just pay it off. But I say it's a better investment to put it in your house because you're gonna already have to live somewhere, and you going most likely most people are gonna pay their mortgage, and you'll just be paying off your student loan. And then if you ever sell, which most people don't, stay in their house for 30 years, they eventually sell it. Once you sell the property, you just get rid of that loan balance, and you'll, go to another property or whatever you want to do. So,
Well, let me ask you this because I've noticed I saw a house the other day, and we stopped. I took down the address, I looked it up on Zillow. Now last year that property sold for 70,000. Okay.
yeah.
Now this year somebody bought it for 180,000. I'm like, that's
Hmm.
$110,000 markup. It
Wow.
does not look like anything. I went and looked in the windows. That house is not been updated. It's I don't know what would make $110,000 uh it makes no sense to me.
I don't know what area
No.
you're in, but all across the United States, home prices have soared. A lot of foreign
Power
money.
surgeon.
Yeah, a lot of foreign money has gotten the market. That's the hidden thing that most people don't know of. A lot of foreign investors, like you guys mentioned, Chinese, they was looking for places to park their money. Then you got, people in the Emirates and the Saudis. They have a lot of funds, so they've been buying real estate. And also, you got a lot of millennials and young generations, Xers that are buying property. So if it basically created this firestorm. I already predicted this on my channel last year. I already predicted that home prices are going to go up because basically um, people were already buying houses last year. So it created a housing shortage as well. So like in Northwest Indiana, there's actually a housing
Hmm.
shortage. Like Gary, Hammond
Hmm.
area. Um,
And you could get a house there for 10, 20,000 not that long ago, right?
yeah,
Five,
yeah.
yeah,
Basically, you could get a house in those areas that I mentioned. I bought my house in Gary, Indiana, for 10,000.
yeah.
Um, those prices are double right now, and it's like literally in Northwest Indiana alone. There's a housing shortage, and they're selling the houses for astronomical prices than what they were before because there's literally a housing shortage, and construction can't do anything about it because also construction costs, which I also predicted on my channel in my video on future projections. So you got lumber costs that are freaking astronomical.
Yep.
A,
Yep.
a 2x4 about it costs like when I was building a third bedroom, which I'm glad I did it last year. It was about $2 or $3 a 2x4. Now that same 2x4 last time I checked was like $12. I
Yep.
mean, so you got builders that are canceling contracts. They're putting buildings on hold because the lumber costs are just too high. You know,
But do you
Hmm.
think that, see, I'm in Wisconsin, so we're pretty close. I mean,
okay.
do you think that this is going to be something that's going to um turn around with the situation, or it's only going to get worse?
Well, does somebody in the chat kind of mentioned that the construction the lumber shortage is kind of like balancing out. So I think it's the lumber cost is going to probably go down. They're saying it's going down about 5% as of the latest like kind of like article that I read about it. But the housing shortage, no, I think it will take years probably for them to recover because it's already a shortage. And the houses, I mean, they're selling in the Chicagoland area, they're selling bandos for like 4 or 5 times the price that they were last year. Like they
Hmm.
trying to sell like tear downs for like 40 grand. And what I mean by tear down is like a house that's like really bad shape, and it's like only people that would buy it is somebody that was trying to tear it down because it's complete rebuild.
Yeah, yeah, I see that here in Milwaukee. I'm like, are they
Oh, okay.
crazy? It's like, no, I would
So let
not.
me share my screen.
Yeah.
So let me share
Go
my
ahead.
screen when it comes to the talking heads about this market. They're pretty much saying that, well, they said the same thing. Lumber prices has dropped, which, to be honest, I thought that was manufactured anyway. But don't get me going on my tinfoil hat and my tinfoil theory. I will go there. I will go there. I
Yeah.
didn't believe none of these shortages, but they're talking about the housing market is on fire. The Fed keeps adding the gasoline. Home real estate statistics from May show a market in Louisville that continued to rise, taking stock of real estate market from June 2020 to how it is now. You got, so they saying that the Fed is the reason of this gasoline, which that's CNN. You know, I don't like CNN. So we gonna click on home real estate statistics.
I am so frustrated with this. And some people will say, hold out, wait. Some people say, buy now. It's like,
You got no choice but to kind of wait now, because even my plans to buy another house is on hold, because I'm not about to spend 50 grand on a bando.
right.
That was what the prices were before the other housing collapse in 2008.
But what about this? What
Right.
about the idea of the lifting? Because I know in Wisconsin, I think my dad told me it's not until September now where people are going to be forced out of their houses.
Oh, that's happening at the end of June, and at the end of this month, literally about a week and a
Everywhere
half.
though, my dad said Wisconsin was September, but he could be. I mean, he could have been wrong. I don't know.
But that's the Fed's moratorium that they were paying money. That's expiring at the end of June.
So I guess.
Oh wow.
Would you think that will maybe make a difference? I hate to see people. You know, I'm not saying I want people homeless, but
People are gonna gobble it up. If it does do anything, it'll bring the supply up, because the people that are waiting on homes, they're gonna buy. Well, actually, that would only help the investors, because I mean, if real deal, I'm sure you could co-sign with this, is that when you buy a foreclosure, the amount of time from when you buy to close is probably like 3 or 4 times higher than when you just purchase a property on a normal market.
oh, I'm gonna lose my mind. Why didn't I do this 5 years ago? I am just
Yeah, that's usually.
Yeah, and you don't want to buy a short sale. That's even longer.
And you're right about
That's, yeah.
the you know, I know people that aren't even 30 yet that have been driving
I don't know
trucks,
what's.
buying house. They bought houses within the last 2 years, so they did good with that. You know.
I mean, it's literally just basically kind of, a lot of this is orchestrated by COVID.
Right.
COVID made it made a bizarro world in a lot of different areas. This is just one. The real estate market is just one of those areas, and you could even say it's going into construction. It's going to other areas, but yeah, it's. I don't know when this is gonna like normalize. I'm looking at, I would just say probably a year or two, a real deal left the building. Probably be back, but
Okay.
yeah, I think it'll probably looking at like a year or two for where it's just gonna be this bubble. Then the question is, when is it gonna burst? That's the that's the biggest thing that I wonder about. Because right now we're definitely in a bubble, but all bubbles burst. It's just a
Ugh.
matter of when. But
Yeah, it's frustrating. I don't know, but I kind of have a plan with that school loan too. Like, I guess my side hustle is gonna be I'm just gonna just pay it off as much as I can. Like, put like 500 to 1,000 on it a month,
yeah,
and at
they
least
they take settlements. Like, I mean, I know it doesn't really help if it's already backed. If you, whatever the case, the loan is actually in deferment or not. But if you could, like, say for example, like I know I owe about close to 60 grand on my student loan. I know for a fact they'll take a settlement. If I called them right now, they'll probably take like, they'll be like, all right, we can settle for maybe 40 or something like that. And you just, all you have to do is just wire them a check, and then they'll take that settlement offer or whatever means that you can pay them. That's always an option. Mostly, I don't know if they all settle, but they definitely do settle for less of the amount that you have to pay. If you could pay like a lump sum payment, but I don't know if they do that if you just pay monthly payments. But
The real estate
Well,
market in Chicago has a median price of $320,000 median price houses, up 10% from last
yeah,
week. And I'll share my screen. I was supposed to share my damn
so,
screen.
so what it okay, Lawrence, I see what you're putting in there about that Wisconsin Jeremy over at the Quarterly at Midwestly lives out there. He keeps track. But then he says end of 2022 and mid 2023, and then it's game over. What does that mean?
I have no idea. I think he's talking about the foreclosures that might come um,
For a
because
moratorium, he think game over of it crashing down.
everybody that buys their house, they're not going to be able to continuously pay it off. Some people are going to get squeezed out. Whether it be taxes going up, whether it be people quit their jobs or get fired, or some other economic black swan event that comes. I mean, these people that bought these houses, basically, if let's just say something happens where the car slips under the cup and all of the liquid falls out, they're gonna be it's gonna be people stuck, with a situation where if the housing market ever gets where a situation where it was like 2008, where houses become underwater, then basically a lot of people are going to be stuck with the bag, and you'll just have a repeat. But I don't know. I don't know what will happen, but it's definitely overpriced. A lot of houses are definitely overpriced. The best thing you could do is find real estate investors that wholesale, and they have properties that are not on the MLS. And
But
that's if
does
you just want to buy.
does every real estate? Well, see, this is the thing. I have an aunt who's a real estate person here. Okay, I just didn't want to really deal with her because it's family. You know what I mean?
Mhm.
And then I have to let her in on everything, and that's kind of uncomfortable. And
Okay, so
I don't know. Maybe I
so
should just go that route.
so here is pretty much the stats. 270,000. That was in February. Now it's at 338,000 as current day. But it says here, shall we discuss the latest Chicago housing market trends and forecasts? Let's first take a look at statewide data. February 2021, home sales and median prices remain positive for the 8th straight month, while available housing inventory dropped again. Illinois' housing market performed well in February with a surge in home sales and higher median prices, according to data released by Illinois Realtors. In the seller's market, real estate prices increased. The statewide median price in February 2021, no, February 2020 was 226,000, up 14% from 198,000. Okay. The median sales price predicted increase 11.5% year over year. March and April, both median prices and sales experienced positive annual change in the Chicago housing market as well. The median home price in February 2021 was around 270,000 in the Chicago metro area. It comprises in nine counties, an increase of 12.5% from 240 in February 2020. All these trends show that Chicago home prices are on the rise due to a very tight supply and low mortgage rates. Housing sales and prices expect to continue their positive trends into the second quarter of 2021. More home buyers would enter in bidding wars to scoop up their favorite deals. Stronger buyer activities will continue with speedy sales and multiple offers, leading to price gains. How did Illinois' housing market perform last year? In 2020, housing sales totaled 172,000, up 9% from 157,000 in 2019. The year-end 2020 median price reached the 225,000, up 7.7% from 209,000 in 2019. Month supply of inventory in 2020 was 2.0, decline of 44% of the previous year.
Wow.
Okay, so the metro housing market has a number of 9, pretty much they got 9 big counties. 9 big counties of number of homes sold in the metro area during this year rose 8.8%, 120,000 sales. That's the highest since 2012, according to the Illinois Realtors Market Report released in December. So pretty much all this is just the data. This is the data of the house prices, the percentages it's at. It says here, city of Chicago, 300. Now it says the city of Chicago housing market 2021 trends. February 2021, 320,000, up 10% compared to February of the last year, same date. Sales, both single families and condo, surged in February 8.8%.
Yeah.
These are the metrics. These are the closed sales.
The biggest thing that jumped out of me is that 44% decline in 2020. That means that's a decline of what was already on the inventory. I mean, new housing basically structures, they don't outpace the decline usually. So those houses that are already depleted from the inventory, they haven't been brought back like into the inventory. So that's what basically economics 101. When demand is high and inventory is low, price goes up. So there you have it.
Yeah, man. So this is the link, because they had a lot of word salad, but we got the gist. The shit was literally 220,000 2 years ago. Now it's 320 on average.
That's insane.
Yeah. I wonder what's going on in New York and LA as far as the housing market, because a lot of people left. They went to various neighboring states such as Nevada, Texas,
Arizona. Yeah, a lot of people left.
But
so when it comes to that, those markets is literally blowing up quicker than anything.
I think everywhere is going up, because even in Oregon, I have a friend out there. He was saying that the house next to him was like 60,000 5 years ago, and now it's like doubled.
Yeah, it's a guy that literally the last time I think I joined this channel's live stream, he had a holdout house in Seattle that was just a basic house, and it was like worth $500,000 back then, and they were building all of these new houses around it, and I'm sure that same house is probably in the sixes by now. So I don't know if he's still holding out, but yeah, I kind of know a little bit just off of the house that he showed, that the house that he was holding out on. But yeah, I mean, there's other ways to get real estate. Like I I don't have good credit either. I'm working on my credit, but you can actually get what is called a seller finance contract if you basically in layman's terms, it's like buying a car, like buy here, pay here. It's like, but just imagine a house, and that's
Yo,
what
can
I
you hear me?
got. Yeah, we can hear you. You had dropped
Yeah,
off
yeah.
for a minute.
But let's talk about what's going on when it comes to them developers. Pretty much one O Block, that O Block
Oh,
area that all them rappers keep on
O,
uh
O Block is owned by
glorifying.
a REIT. O Block is owned by a REIT. And it's owned by some like REIT that they own actually a couple buildings downtown. They own some other apartment buildings. This O Block is one of their most toxic investments.
Mhm.
That's
I've
why
never
they're
even
trying to
heard
get
of
rid of
O
it.
Block. O Block. This is news to me.
It's called
Chief Keef area, that Chief Keef,
it's
that
called Prairie Gardens, I believe.
Parkview,
Parkview Gardens.
Parkview,
Yeah,
yeah, Parkview.
yeah.
Okay, but yeah, that those areas is pretty much uh you got Jerry Reinsdorf. I think he's either the owner
What was
or
the
the general
goal with it?
manager of the Chicago Bulls.
Yeah, he owns the
Well,
White Sox and the Chicago Bulls. He
yeah.
bought he
So
bought
you
them for
got
cheap.
Reinsdorf.
Yeah, he bought them for cheap
Then
back in the
then
70s.
then you got the Cleveland Cavaliers owner Dan Gilbert. He's trying to take over Detroit and take
Ohio.
over those hoods in Chicago. Yep.
Oh, yeah.
Oh my God.
Yeah, I mean, like that's what I tell these people. Like, people be like talking word about Pookie and Ray Ray. I'm like, dude, these I ain't worried about no damn Pookie and Ray Ray. It's Steve and Chad and Robert, man, taking over as the realest gangsters. I mean, they got they own
Areas.
O Block. Who's harder? The
Because
people that
they trying
own
to
O Block or people repping O Block?
And look
yeah,
at
yeah,
look at all the
because they're trying to staff. Sorry about that,
Go
Kelly.
ahead.
Finish.
No, I was
No,
just
finish.
saying, and if you look at the graph of all the land that Bill Gates has purchased, I mean, he's got a lot of farmland under his belt, a lot in many states.
Wow. Yeah, he's I didn't read up on how much he owns, but you could just imagine. Shoot. I mean,
He's got land here. He's got, I mean, it's in so many places. I'm like, oh my God, this is really happening.
yeah. Yeah, I mean,
Well, because they got arms, because they're trying to be able to have a whole arm around Chicago. Anything that's around the downtown area, 15 minutes away, they're pretty much trying to get those areas. Anything that's close to the downtown, you got pretty much they saying luxury condos, staffing security firms in those areas, and doing some zoning, and also they got to contact HUD of redistrict those areas. So pretty much they got open gangway and affordable housing. Affordable housing projects is pretty much not in that area because they Cabrini Green and Robert.
well, you got the O Block is okay.
Back in the previous day.
The thing about
Mhm.
O Block is it's part of their 10-year or 5-year goal, right? So O Block, if I did a video on O Block, of course, I had to. I had to get to talk about the money. O Block is near Hyde Park, and Hyde Park is basically University of Chicago, which is Ivy League, the only Ivy League institution in the entire state of Illinois. And basically, that's one of your richest enclaves of Chicago, the South Side, before you get to downtown. And it's right across from O Block. or the area that O Block is in. So you got massive gentrification going on all around O Block. O Block is just a big pie, big piece of the pie of that gentrification that's getting pushed into that area. So where the money is, they got to push these people up out of here. And, they got a plan for that area. And it don't involve anybody that, pretty much is repping O Block. So they got to get them out. And, they got to go. And I guess maybe that company is not going to be the ones to do it, so they're trying to sell it, and there you go.
Yeah, man, because they wasted a lot of money on O Block, because they had reports of them putting in $5 million in renovation just for the value not to surge. Matter of fact, more of pretty much that was the height of that Chief Keef, wave, where pretty much that area was getting highlighted. You had all those murders, deaths. So the prices of the market is going to pretty much stagnate and crash due to the fact of those crime statistics being so high in that area. Developers and construction people can't effectively get in that area. To be honest, you got Reinsdorf, you got Dan Gilbert, you got a couple other billionaires pretty much saying we want that area. We pretty much want anything that's close to downtown area. So all the areas from the show, The Chi, where pretty much, if anybody's in tune with it, the kids go from the liquor store from, I guess, 67th to 73rd, and those ranges of where the school, the high school is at, from the liquor store that they keep showing in the show, those areas probably get taken over by developers. They're pretty much saying, "We the big homie, we the big homie."
Yeah.
But
what are you
where
gonna do?
are the people gonna go? Where are they gonna go?
O Block is off 63rd.
Harvey.
They'll go everywhere. A lot of people when they shut down the projects or they bulldozed the projects, a lot of those people went to the south suburbs. Some of them went up north, all over, but primarily in the south suburbs and in other parts of the south side of Chicago. So it'll be the same thing, but it's a small O Block is about 500 residents. I mean, they'll probably disperse in little small enclaves. You got even people that has moved to Indiana, Hammond, Maryville, even Wisconsin. I mean, Milwaukee. I used to live in Zion. I used to drive to Wisconsin and get gas. I was so close to Wisconsin.
Wow.
I mean, I used to do service calls to Wisconsin and Milwaukee.
My home city is Madison. I can't even consider buying anything in the city. You're talking 200,000 at a low.
Right.
I mean, it's insanity.
Yeah. I mean, property values are it's off the chain right now because it's a bubble. It's basically it's inflated due to these circumstances with this virus. I mean, it's bizarro world. Even the lumber costs. I've never seen lumber be that expensive. And it's not a tree shortage. It's not a wood shortage. It's it's something that was basically cropped up. It's no freaking wood shortage or no lumber. Like you would think like the prices like that is like, oh damn, it's like a big forest fire that sweep through the entire United States and tore up all the trees.
Right.
No, that did not happen. Lumber, the wood is fine. I see trees everywhere. It was just something that was just freaking created. However, it was created, and it's affecting a lot of rebuilding that people are trying to do, and future plans and stuff like that. And the housing costs, um, I mean, like I said, it's a lot of foreign capital that is being used to just basically buy up all kind of property. Then you got a lot of millennials get older, they gotta buy property, maybe even the young Z's, and of course Gen Xers. And yeah, I mean, it just drew up everything. Then you got a lot of people moving from different parts of the country. So yeah, it's pretty much inflated everywhere I hear. It's just prices are double, if not worse. I've heard places in Texas they're uh, freaking bidding over $100,000 of the cost of the listing of the property just so they can compete with
Yep.
other buyers. I mean, this is bizarre world. Like I said, I wanted, my plan was to buy another property. I don't even think I'll be able to buy another property. I mean, I'm paying cash, so I'm out. I'm priced out. You know, so
I'm gonna need one
This-
of y'all to do me a favor, man. Give
What's that?
a visual for the
Okay,
viewers. We got to look at. Give me the best pictures of downtown Chicago. We got to look at
okay,
how can I say, an overhead view, so you can give us a directory on what it is. Because I know where the developer is going to be at off finances, but you know the area because you are Chicago. We Chicago dude, so we need to use your screen real quick, and I'll share your screen, and we can be able to do that.
hold on.
'Cause my computer's glitching like a motherfucker.
What's going on with your computer, man? That's what I do for a living.
It glitched hard, Brett. Like I clicked on one thing and it went to the other, then pretty much cut off the whole screen.
Okay. All right.
I don't know, man. I upgraded my equipment, man. I got a better microphone, but share your screen. I'll be able to get everything. And we got Ism in the chat. He a Bay Area dude. They're pretty much getting Oakland, the Oakland Hills. John, where John Madden is at. You got people getting all those homes, $2 million homes, now being $3 million homes, houses that were 400,000, 750,000. Inglewood homes that were 150,000 by Boston. Those areas is pretty much 800,000. Old Nipsey's old hood, them commercial buildings, they went up.
Okay, well, I'm gonna email you.
Bro,
I have to get ready for my Zoom call. So you guys have a great day. It was nice talking with you.
Oh, it was nice talking to you as well.
I respect you,
Thanks
Kelly.
for the info. Yeah, I'll get up with you later.
All right, for sure. Okay, bro, Genius, I see your screen, so I'm gonna share your screen.
All right.
But we gotta look at Chicago. We gotta look at those areas. Okay. Okay, I clicked on it.
All right.
Okay, you got your screen.
So we're gonna try to see if this zooms in. Oh, this is it took it to the website. Let me go back. Let's see here. All right. So let me see here. So this basically is where my mouse cursor is, the north side of Chicago. And this is the south right here towards the back end. Okay, so this is this Lake Michigan. You see all of these, all of this is basically museum and stadiums and stuff like that. It's no houses on this side. The houses are tucked. You can't even really see it where the North Shore is, but it's like across the lake, and that's where. And then you got a few apartments and skyscrapers and stuff that are on this lake side here.
Okay.
But all of the money is up north from basically Hyde Park all the way up north. Okay. That's where the money is. The south they're trying to push basically because they already pushed north, so most people can only afford the south sides, if that makes sense. Because up north is
No.
if up north is too expensive, so they gotta push south. It's kind of like, let's look at it like the Bay Area versus San Francisco. San Francisco is too expensive, so you know, wife and kids, we gotta move to the
Well,
Bay Area because that's all we
well,
can
well,
afford.
with San Francisco, if people can't afford San Francisco, they usually go either Richmond, Vallejo, where E40's from.
Mhm,
You got pretty much a whole bunch of San Jose, Santa
mhm.
Rosa. Those areas is pretty much where, say, if low income people that couldn't afford San Francisco stuff, they had to went to those areas, or they got
Yeah,
redistricted. That's why I
now
said
these
we
ain't
need to
low
figure out what's the
income.
redistricting. Mhm.
This not low income that I'm mentioning. These are like middle class, maybe a few
Sixty
upper
thousand
middle
dollars a year
class.
type earners,
Yeah,
60,000,
they
80,000 type.
can't
Okay.
afford to live up north, so they're moving further south. And when I say they, I'm not even talking about white folks or anybody. I'm talking about everybody. I
We're
mean,
talking about income
basically,
level. That's why I said income. That's why I
yeah,
let off
yeah,
income.
yeah. Because it's like, I mean, I'm not even talking about. I speak in generalization. If I wanted to, specialize, I'll say I'm talking about everybody. I'm talking about your average run of the mill white family, Hispanic family, black family. They're being priced to move south because it's close to downtown and also the western suburbs. They're
Okay, and
they're
we need a overhead. We
um
need another overhead view.
okay. Let me see if I can find uh
Preferably a view where the apartments is at. To be honest, if we
um
can get uh park view and be able to get a view of O Block, quote unquote,
oh
we
okay.
can be able to
I
get
can I could
a
definitely
good visual.
I think it's not even, it's called Parkway Gardens. It's literally called Parkway Gardens, but let me see. Uh Overhead view. Let me put overhead view. I mean, it's funny because I didn't even know it was called O Block. And I used to like walk up and down. Um all right. So this is a bird's eye view of O Block here. Chief Keef and Lil Durk and company. Okay. So let's try to see if we can make this bigger or whatever. Guess this is as big as it's gonna get. Uh oh, actually I could make it bigger here. Okay. All right. So this is the south side of the street, south side of O Block. Oh, actually, it is a area view. So this is all O Block right here, Parkway Gardens. So you going far south this direction.
So
It's
you
kind
got
of
$10 billion in investment. You got $10 billion of pretty much private equity money, private equity investment that's going to be in this perimeter, this whole dichotomy of these buildings. That's
yeah.
pretty much the investment's going to be. They're pretty much trying to get something that's all in the range of 15 minutes to downtown. So that's literally uh, the circulation of where the dollars is going to be flowing. They're trying to knock things down and
O Block
get,
is 15
hopefully,
minutes from downtown. Okay,
15 minutes.
literally
They need
15
that area.
minutes. Okay, it's like it's 2 minutes from Hyde Park, which is like basically. I'll play this again. This is just a video, but it's blurred for some reason. Let me go back. I don't know why it's blurry, but let's see here. I'm having some technical difficulties, but yeah, it's literally about 5 minutes from actually not even 5 minutes, but literally like 2 minutes within walking distance of Hyde Park. Within, like, you literally can go to the University of Chicago and literally live right in O Block. It'll be like within walking distance. And I bet you was some smart guys that actually did that. Michelle Obama used to live in one of these buildings. She used to
Well,
live
they
in
have the
Parkway.
Obama Museum that they're trying to get through as well. They have the
That's
Obama
also
Museum
in the
that they're
works.
trying to push through.
You don't forget, like me, like the big picture. A lot of people forget the big picture. Obama Library is supposed to be within this area, actually, not too far from here. Okay, and then let me go backwards to kind of show the lake is right over here. It's within walking distance from the lake as well. Okay, this is prime real estate, ladies and gentlemen. I mean, literally, like, prime real estate. It's probably the most prime real estate on the market because it's already
Let's go
there.
out. Let's look at it more of an outward. The thing what you just did, you went pretty much backing out. That was pretty much a good. That was a good assessment because
that was
you could
like
be
a
able to see the overhead view.
bird's eye view block. Actually, all I have to do is just put in 63rd and King Drive and actually get the actual Google map view, the freaking Google view, and that should do it. So let me try to get technical real quick. All right, that's street view. Satellite view. Oh, that's what I want right there. All right. Okay. So let's zoom in. It's not what I was looking for, but it's close to it. Let's see more. Yeah, that's the satellite view. That's globe view. All right, so this is Parkway Gardens right here. This is all Parkway Gardens. And they even got it. They call it. They even marked it O Block. Oh man. So you let me know what you need to see. I got it 2D.
Because
Make it 3D.
Because
let me show you how close.
We need to find where O Block is.
This is University of Chicago,
United
right
States.
here.
Okay, University of Chicago. Okay.
This is University of Chicago. Now you see, this is where O Block is. Okay, and literally within like walking distance of University of Chicago, like a few blocks away.
The University of Chicago is buying those areas as well, like how USC is doing.
All of this is the prime. These are $1 billion blocks right down here. All down here. These are like, this is what I tell people. This is what I would tell my children when they get older. When you looking at real estate, count the property values on each block. This is Hyde Park right here. All of these this block right here, it's $1 billion block. This is worth, you count all the, well, these are private real estate because it's owned by the UFC, but this is like literally my screen kind of jumped, or maybe the government don't like this live stream, one or the two. But
yeah, man, we just try to be able to figure out what's the correlation, because the University of Chicago, they might do a University of Southern California when it comes to the hood being literally in that vicinity. Because USC,
well, what I'm trying to tell you is that
you in the hood.
This is literally like this is literally for me to live in Hyde Park right now. I would need, okay, let me just show you numbers just so I can explain to you. So let's just put in Hyde Park. Let me go to Realtor, show you what I'm talking about. Because basically what I'm trying to tell you is Hyde Park, people that from Chicago already know what I'm talking about. Basically, Hyde Park is an upper class community. It's an upper class community of Chicago. It's a little small area. Actually, it's a big area of Chicago, but it's very much an expensive area. So I'll put in the highest price, and you'll understand what I'm talking about. Now you see this is the most expensive property for sale, $4.75 million. Okay. It's just a look like a 4 flat. It's like 1.7 million. Okay. 1.5 million with an offer already, contingent offer. Okay, so this is why Parkway Gardens is going for sale, because all of this property can you hear me? All these hood houses, basically, all this over here is like upper class. All of this over here is like Hoodville. So Hoodville, the prices are going up because they balling out of control over here, and they coming over here looking at these properties. Okay. That's basically what I'm trying to tell you. And then you got O Block, which is just a part of the overall plan to get all of these areas. And it's literally like
that block. That's why they got $10 billion. That
it's literally like on it. This is like the Illinois version of basically San Francisco and Oakland. This is Oakland and this is San Francisco. All of this Hyde Park area. This is San Fran and this is Oakland. Literally the only my screen, let me reload my screen again. That's basically what's going down. So
because you think the University of Chicago got investment in that? Because I'm thinking like I see USC correlation same way how the University of Chicago, same way how you got the University of Rutgers when it comes to Newark.
Okay, so the zip code here is literally it's 60615, and then Parkway Gardens. Let me see here. What's the zip code over here in O Block? Let's see here. It's saying about the same zip code, but no. Yeah, it literally is the same zip code, 60637. So this zip code is up for sale. It's it's going down in this zip code, 60615, and then 606.
Look for seller financing. Because with seller financing, you can kind of negotiate your way where you can be able to have it where if the property is
how do you find that on Realtor?
If you how do you find that on Realtor? You can actually do something.
How do you find that on here? You
seller financing for sale by owner. Anything that's been in the market for 70 days, you can pretty much negotiate something.
I never found that on Realtor. They don't have any but basically what the thing about seller financing is what you got to do for that is I'm gonna click off of this share, but basically with seller financing is just like what you said, it's a negotiation. If you can get to a property owner that already owns the property, even if they have a mortgage on it, and you got a good lawyer, and you can get the confidence to basically get the seller to basically give up his rights and give you the rights, or her the rights, from their rights to your possession, by means of whether you draw up a contract for a 10-year payment plan, or ideally I would say don't buy a property unless you can pay it off within 4 to 5 years. You know, and then they'll
5. You would have to do a 5 setup.
yeah, like you basically, all you have to do is just negotiate with the buyer. I would say ideally a buyer that owns the property already, doesn't have a mortgage. Because if they don't have a mortgage, it's easier to make the situation work. Because if they got the property deed already, all you have to do is draw up a down payment, an agreed upon down payment, and what the payment will be for the property every month. So that'll be like 62 months or something like that. And you just draw up some type of paperwork, have your lawyer draw up the paperwork, have the buyer sign the paperwork, get it notarized, you procure the down payment, whatever you agree upon the down payment. And basically once you get everything signed and notarized, and seller gives you the payment, you already procure the property, get the keys, and you just got to pay him, auto draft the payment to the seller on record. And as long as you pay it off, ideally you want to pay it off before the 5 years, and you get the property. That's any property in the United States. I mean, I don't know, state by state I have different laws, but basically you can do that on any property. I mean, a lot of people will call it finesse. That's a finesse
with any property. Wraparound. Motherfuckers be doing wraparounds, because with seller financing, situation of, if the property is 250, I have a down payment of 50,000, not 50,000, 35,000, and I got to make sure I can be able to get some type of wedge and margin I can keep. But I can be able to use that 35 to debit of the 250 while listing it on something of a Zillow for 330, 350,000, and collect that 2,500,
right.
$2,500, $2,700 a month in rent, while the payment to the seller will probably be around $1,500. So I need that $1,200 markup, $1,200 to $1,400 markup times 12. That's around 15, 20,000.
Right.
15, 20,000. And you need to be able to do some value add. But, certain things with value add, you have to be able to make sure that you get amenities that can cash flow, like vending machines, coin laundromat. But you do that with a master lease on an apartment building, then a seller financing on a single family type setup. So you got to get your developer on when it comes to the master lease situation, because you are the master tenant. When you granted master lease, you are the master tenant, and you are the property manager. You are the developer. You got to collect some payments, but you can assign a management team off of the
if you want
percentage of 5 to 7% a month.
You are right in what you're saying, because here's the deal. It's probably the best time ever to get into seller financing when it comes to what you're talking about, commercial properties, because you got a lot of commercial buildings that are just sitting. They're literally just sitting, and their tax obligations to the owner on record. So if you can find an owner on record and you see a building that's just been sitting for, unleased for like years or months or whatever, you can actually draw up a seller financing probably easier than someone that owns a house, because they don't have nothing to lose. They're already losing, and probably been losing for so long, because basically REITs I mean, actually, not even REITs, but just office spaces and retail spaces have been getting hammered even before COVID, because it's really, really hard to compete with, Walmart, Amazon, and Costco and all these other, big box, stores. So a lot of these mom and pop shops already went out of business and they're just sitting. And I mean, you could literally, like, I've been trying to find something because I got startups that I need a retail location, brick and mortars location to kind of get my startups a home. It's like these companies, I mean, these like retail establishments, man, sitting, in different locations. You could probably easily get a seller financing situation where you got an entire building that you negotiate with some type of 5-year or 10-year plan to pay it off. And you could just basically, yeah.
Because with the setup towards of finding these vacant homes, that's where your ass got to get on PropStream. That's why you got to use Connected Investors pin tool. That's why you got to be able to figure out who this is. You got to do some skip tracing situations, because you got to get those deals and pretty much negotiate like a hawk.
Yeah,
this building's out of commission. I can be able to get it for a discount.
Right.
With seller financing, you can split the down payment. You're splitting down payments. So say if somebody did had $150,000, with that, they can probably get a $2 million building.
Right.
With because that, instead of trying to do traditional and try to get a $650,000 traditional banking type situation, go get you a seller financing contract agreement. You split that down payment. You work up the terms 5 to 7 years. You be able to get it for a lower price, up market. We'll mark it up when it comes to Zillow listing it. You pretty much get it for 15. You resell it for $3,200 a month. It's able. That's literally how people win. There's a dude named Ron LeGrand, old dude, probably around his 70s. Ron LeGrand pretty much got methods of how to negotiate split down payments. Respect to UK. I see UK. Pretty much how to split down payments, how to be able to negotiate the terms where he debits the down payment debits towards the whole property. So when he does have the option, he can be able to say, well, all the money that I gave you from the down payment and collecting rents, that all went directly towards pretty much the cost. Other times people can renegotiate the terms, pretty much a contract extension. For all the people that are sports buff, a contract extension for 2 years, and pretty much have the ability to be able to use pretty much the money that you get from the tenant to pay it up.
Right. And then you got another.
So you got to do negotiations where
you got another come up, because different places they have different types of brick and mortar commercial buildings. In the Chicagoland area, they have a lot of retail locations that have apartments above. You can literally get one of those. You can, rent out a space or use a space for your business, and also rent out the spaces above the building and make money off of rent. Because see, here's another thing in the Chicagoland area. There's also a shortage of places for people to rent, because it's a big rent boom as well. So you can literally collect $1,100. You might have 4 units up above the building that you could rent out for $1,100 a month. So all you had to do
show some visuals. Right? Show some visuals what you're saying.
Let me try to see. Let me go to.
You can share your screen, because you're talking about rents, and rents is definitely area specific, man. We got.
Let me go to
give some visuals. And Kay, if you want to come in, K's in Baltimore. So K, if you want to come up, Baltimore real estate, you got a lot of New York developers pretty much going to Maryland and
Let me
pretty much
go
snatching up
to
those areas. So if you would want to come up, K, anybody want to come up,
let
they
me
can be
go to
able to come up to
LoopNet.
self-entitled.
Let me go to LoopNet and see what I can find as far as any retail spaces with commercial units. They got them all over the
Seller
Chicagoland area.
financing, the seller financing, you can do a mean wraparound,
Yeah.
especially if it has some monster equity. Say if it's $20 million,
Mhm.
because with Cash Capital, he actually has a business in Chicago, so you can actually pull up on him because you're in the Chicagoland area. So he does it where he can be able to give people up to lowest in $20,000 in personal funding, highest of $500,000 personal. He can be able to do a credit setup where he can create the LLC. You create the LLC. He can be able to add the trade lines on, and you can literally turn 1 million in credit line to 10 million in business credit off of creating sub departments from your LLC. So that means if you had a chart,
Mhm.
you would have a big box. Then on the lower end, you would connect 10 little boxes, and all them
Okay.
10 little boxes has credit line, and pretty much you can get access to loans. You consolidate those, get apartment building, do a wraparound where you can be able to say $5 million building. It's been in the market for 100 days. I can negotiate something where I can be able to say, okay, here's my down payment, but I can be able to get a credit tenant, and the credit tenant in will be able to pay for what I owe to the owner. So okay, I'm gonna share your screen.
All right.
So I'm gonna share your screen. So when it comes to big
So this is
commercial buildings,
this is an
definitely
example
opportunity.
what I'm talking about right here. This is a
Uh-huh.
like this is an office or retail space, and it's got units above. So like you could literally they have a whole bunch of these all over, and a lot of times they just need a little repair. Might need commercial water heater. Might need a little bit of work. You can negotiate that, and you basically can get this with seller financing because a lot of times depending on the neighborhood, property like this might have been sitting for a long time, you know and the seller, he's trying to get something from the deal because a lot of times, most times you are taking on the property and you also are taking on the tax obligations for the property. So it's a win-win for most sellers, because they get out of the tax obligations. One, two, they get some money in their pocket for the property. It might take them a while for them to actually get the money, but they'll get something for their troubles, and they'll get
Dealing with you.
relieved of the tax obligations. And
Exactly.
then you
Exactly.
got a place that you basically can rent out, and you have a home for your business. You know, so it's a win-win for you because you'll start making money right away after of course, spruce the place up, and you can either rent it out to somebody else for their business, or like in my case,
Credit
this will
tenant.
be this will be a prime place to have maybe my herb business or my computer business. This will be a home for this place right here. Like either one of those businesses I could use for this location, and then I have apartments above that I could lease out. That's what you were saying when you said that. That really stuck out to me. I actually forgot about the commercial aspect of seller financing, which, like I say, is very doable.
Because it's doable. You can be able to utilize that credit tenant where you can be able to upcharge $5,000, $10,000 a month. off of something that either was not in commission or just had a struggle. To be honest, commercial has an opportunity because of the fact that a lot of commercial owners in 2020 got smashed.
Yeah.
Debt piled up, and they'll take anything.
All you had to do was spend a little cash to basically get the apartments ready to go. You don't even have to worry about the actual retail space. You want to get the apartment spruced up to be rented out within 90 days, no less than 6 months. And
No less than 6 months.
You can literally use the apartments to pay the seller financing fee plus make a profit every month to the seller, and you still got a business that you can operate your business whatever you want to do. You want to sell candy, you want to make a little retail like merchandise store, whatever you want to do for your business, you got also a place for that. It's like a win-win for both parties. Okay. I mean,
Okay.
I literally I need to start like literally looking into this tomorrow. I'm glad you reminded me because I actually need this too. So this will probably be my next seller financing deal, is a commercial property, ideally with apartments above. Um, man,
Yeah.
we giving
Yeah, man,
free game right now, man.
Yeah, you know,
Definitely.
because it's about negotiating. It's definitely about negotiating, figuring out what's that market doing. Because you're interconnected with the market. You pretty much will make a perfect bird dog for me when I need to be in that market.
I'm here to utilize, man, and we're giving out free game. Nobody is talking about this, Harley, on YouTube, man. Definitely
Definitely
support.
not in this sector. Definitely not in this sector. Definitely not in this sector.
Yeah, I mean,
Barely
I
in this
got a
sector.
wealth of knowledge and real deal. We dropped it on you. Definitely support. Hit the cash out. Dollar
Come
sign
on the
Mr.
panel,
Kofi
y'all. Y'all need to come on the panel. To be honest,
23G.
y'all need to come on the panel. Y'all just need to
Yeah,
come
don't be
on the
shy.
panel, bro.
Get on.
Come on the panel because there's too many people in too many markets that knows what's going on. They know where the developer at.
Yeah,
I
hop
got
up on
people
the
that's in
panel
real estate that
and
can be able to get in contact with lenders.
get out the
Hop on the
shadows.
panel, man.
Show your work. Show what you know. I mean, basically, I can't say it enough. And definitely support the channel. We done gave y'all $1 million worth of game just between me and Real Deal. So I got a meeting I gotta go to. So I gotta hop off,
All right,
unfortunately.
man.
Peace out.
All
But
right, no
yeah,
problem.
definitely support the channel.
You got my info, man. You definitely got my info. So hit me up whenever you're pretty much in need, man. You pretty much got my personal. So whatever you
I'ma
need,
definitely look
man,
out.
just be able to negotiate it correctly, dog. Definitely
Okay.
negotiate that correctly, man. Because the seller financing, when it comes to these commercial properties, is pretty much like stealing. That's why I got my man Mark from Capital Cash to pretty much figure out a deal where I can be able to get some good credit. So we gotta get some more commercial type of ideas going because seller financing is to the aspect where you don't even need the credit. And to be honest, you can advertise seller financing to the end buyer. So the person that's would be buying from you that's coming in, you can be able to mark it up and be pretty much say, well, no bank financing. No bank financing, people are going to be rushing to you. So you'd be able to get that property set up for say 1.5 million negotiated downward of a listing of 1.7. And if you had a down payment of 100,000, hell, even lowest of 60,000, it depends on how much of a bind is that owner is. If that owner is in an extreme bind, then you can be able to find a way how to be able to get involved in that asset and to be able to mark up the price off of putting it on Zillow, LoopNet, Realtor, Showbiz if it's some really nice type of properties, but negotiating with the direct of for sale for 20% discount. So you get the sale for 20% discount. You need a haircut at 20%. off of the properties that's been in the market for 100 days, 120 days, 150 days. If you can get those type of setups, then pretty much you got leverage because he needs you. You don't need him. He needs you. He needs you to be able to move forward because he's either in a, say, of a divorce. A lot of the times when it came to the lockdowns, people were in debt very quickly of 70,000, 80,000 in bills. Maybe any sort of nuance. Anybody can do research, figure out skip tracing. You can be able to do prop stream to be able to figure out who is who. Because if you can be able to get contact with the LLC and just call the LLC, because usually LLCs is pretty much all public record, and the 800 number or whatever number that's pretty much listed, you can contact them, call them up and say, I'm a local real estate investor. I want to be able to see if we can be able to do business. I want to be able to send you deals so you can be able to look over. And if we can be able to come to a terms of agreement, we can be able to negotiate a commission or an assignment fee, preferably an assignment fee, not a commission, but it has to be where you benefit from that deal. So you got to use negotiation skills of finding how long has it been in the market, how much money do you have liquid, and your ability to be able to get personal credit, fixed business credit, corporate credit, so you can maximize all angles where you don't need to keep on asking for a down payment assistance with a construction loan to be able to build certain things. But marking up the price is really what's needed, because if you can be able to get $1,500 that you got to pay for a single family, and you can mark it up for $2,200, $2,500 a month, it's a small victory, but it's still a victory. But when a commercial apartment building, just imagine both negotiating a lower lease payment and marking it up higher, then raising the rents on each door. You can be able to multiply. You have the economies of scale. You have literally so many angles and avenues to be able to maximize when it comes to profiting off of multiple doors and just figuring out which areas, because New York City is actually another market when it comes to commercial buildings that people should be looking at, because the occupancy, you got occupancies of like 70%, 60 to 70%. When it comes to luxury buildings, and you got rent moratoriums where people are pretty much underwater of people not paying for the time being. But if anybody wants to come on, definitely please hop on. Anybody is free and welcome to join. Anybody's definitely free and welcome to join. To be able to talk when it comes to anything involving of real estate or what's in your area. Because to be honest, people need to know what's in their area. Because people don't need to be a numbers whiz. Just know what's in the area. When it comes to something that may be vacant or something that was active but not closed, because that may be an opportunity where if you can be able to write down the address, do some researching when it comes to using PropStream, using tools like PIN, skip tracing tools to be able to skip trace the phone numbers, or be able to figure out what phone numbers are affiliated with each other, calling them, doing a cold call, and just providing a cash offer, fast close. You can be able to find the cash buyer by pretty much doing the same thing when it comes to who bought what. Because if it's an LLC buy, if somebody pretty much buy a property in your area in an LLC, more than likely they are a fix and flipping company, a developer, or someone that's in the aspect of investor. You can be able to call them up and send them deals. They say, how you figure out how you got my number? The internet. And just pretty much stay on the aspect of, I'm an investor too. I want to be able to send you deals. You can be able to benefit off of their next deal. Just off of the aspect of just finding the data of the sale, because when it's cash, everything's public. So the cash transaction, everything is made public based off of estimated number. In LA, it's $2 million, up to $2 million. That pretty much that limit in New York, it's probably up to 3 million. Because I know New York has to raise up um, certain things for anti-money laundering laws, pardon me. But you got to have the aspect of providing them a deal, you benefiting off of $10,000, $20,000 margin, and you can be able to go on your merry way, send them more deals. Hell, you can leverage the relationship to the point where you send them enough deals, you can get access to a line of credit from their company, and to be able to somewhat like earn your keep off of just send them deals. And you can be a person that finds more and more cash buyers or hunting out for more and more cash buyers because you got to send them deals, because you can surpass the hard money loan situation just by finding, or say if you see an advertisement of we buy houses signs, we buy houses phone number, if you know a number that says we buy houses, you can call them up and say, I want to be able to send you deals, and they're not going to turn you down because they are deal hungry. They're very deal hungry, so you can be able to work out some terms, and you can be able to benefit off of them having the ability to get lending, the ability to have cash on hand, or ability of them having a business group of partnerships, because you can do this with we buy houses signs, call them up, send them deals, because they're literally needing the deal. They're literally trying to be able to find something. And if you already have something locked up under contract, because you got to have it locked up under contract in order to avoid them to sidestepping you. But if you're going to do the reverse engineering of calling somebody off of you using tools of PropStream and PinTool, Zillow, and finding who bought that house, you got to be able to make sure that you don't give them the deal up front where they can sidestep you, steal your deal, and pretty much cash benefit without you being involved in it, because you need to be in the mix. You need to capture that transaction. You need to position yourself to capture that transaction by finding out what's in your area, vacant homes, foreclosures, tax liens, anything of the aspect of somebody being behind, pre-foreclosures. If somebody's behind, or if that property has been in the market for close to a year, that's leverage that you can use to be able to negotiate something of a seller financing, or of just getting a straight discount on something if somebody has money to outright buy something. Because if somebody has 150,000, I think they should try to go with commercial, or at least think bigger, think more diligently, think more bigger when it comes to try to get a commercial property of using that 150 in credit cash into $1.2 million building, $2 million building. Be able to negotiate it where that $2 million building was negotiated at 1.7, 1.8. So that's 200,000 in value and equity that you pretty much can get on the back end. And to be able to upsell it to you can be able to do your points on the loans. But we can be that's literally a different video, but still negotiating everything where you can be able to get it for a lower price and mark it up from just off of sheer knowledge of leverage, because people are going to flock with seller financing because it's not bank. You're not dealing with the bank up front, they're dealing with you. You can be able to get a down payment from the end buyer and also collect rent. So if a 1.6, you can negotiate it to 1.6 on a $2 million valued asset and list it up to 1.8 to 2.1, get a down payment of 200, 300,000 from the end buyer, plus get $6,000 a month on rent. You can pretty much leverage all of those metrics to be able to pay off the asset, have money left over, and be able to use the money left over to be able, because negotiating and figuring out what is their status is definitely a key. Because people say that everything is high, which that's true, but that's literally on a retail type of scale. People are trying to go retail instead of trying to figure out off-market deals or a struggling, motivated seller and get a motivated end buyer by off of marketing, listing up on Zillow. You can literally snatch one thing from one site and list it up on the other. So if anybody wants to join up, this is an open panel. If nobody doesn't join up in about 2 minutes, I am literally cutting this off, but I respect everybody that is tuned in and still listening. I appreciate everybody that's pretty much big supporters. So if anybody that wants to join, they can be able to join. But negotiating is definitely a master tool that can be able to definitely get you in multiple assets and split down payments where you don't have to use the whole 150 to get the $750,000 asset. You can literally go bigger, have more equity and a larger economy of scale, because apartment buildings, multiple doors, you don't have to worry about a property manager declining you, because property managers usually only want to do multiple doors. So you can negotiate with the property manager for 5 to 7% percentage on the monthly rents. So with you marking it up and you adding amenities or getting, and the thing is, with a raised net operating income, the value goes up. So when you do the things of adding amenities in apartment buildings and negotiating certain type of things, you can be able to leverage a lot of equity that's been built up. So the property manager will be the assigned management that you do for day-to-day management. So day-to-day operations will be ran through them. A lot of people usually work their way up to eventually own a property management company, so they can be able to use that as a write-off and keep everything in-house, because with property management fees, you can write that off on the taxes as well. That's something that's pretty much in the tax codes. I'm not a legal advisor, but that is something I have read. This is definitely not legal advice, but this is something that is strategies that are used, that can be researched and can be brought up by people that are lawyers. But Sal, respect to you. Respect to you. But when it comes from commercial, 60 to 70% occupancy, and if it's on the market for beyond 70 days, then yes, you can be able to come in with some type of leveraging power, because they need you. They need you. And you can find seller financing, owner financing for sale by owner, assumable loan, or just something where it's just been on the market just for a long time. That's literally a ways of negotiating and getting that asset, and you do what they call strategy of value add. So you just got to build up the asset by new amenities. You don't do 100% renovation. You would probably do a percentage of the inspection of rooms that need it, areas that do need it, or just the parking lot, the curb appeal. A lot of people would do a name change. A lot of people would just straight change the name and try to give it a new spin to it to be able to raise that value, because everything is about raising that value up. So you got to raise the value up. People would change the name. And if there were a bigger investor, they would get a golf course, commercial apartments, luxury condos, may clean up the areas that may be around the area. So they might do a development project in a location where it's lower income, so they can be able to kind of have an ecosystem of bigger homes, bigger square footage, depending on the space. A lot of the times, eminent domain comes into play when it comes to didn't have to knocking down to create new stuff, or the surrounding city pretty much be the route of new development coming in. But it was definitely a pleasure from everybody. If If anybody wants to be able to get in contact with me, creditbuilder475@gmail.com. And if you don't get a timely response within a couple of hours, my secondary email is businessdevelopment1324@gmail.com. If anybody wants to be able to come up the last moment, if nobody doesn't come up, I will pretty much cut this live stream goodbye, and people can pretty much carry on with their day. But if anybody wants to come up, they can be able to come up. And if anybody wants to be able to contribute to the stream, Mr. Perfect 23G. Mr. Perfect 23G is my cash app for anybody that wants to contribute. But if anybody wants to come on before they book a consultation or may think of booking a consultation, we can be able to come up and we could be able to have a formal discussion, a more formal discussion, because there's too many opportunities, there's too many angles. People that understand basic level economics, which I don't profess myself as no mastermind, but if anybody that's tuned into this channel, I would definitely say that they are someone that are definitely people that are business oriented. But the people that are business oriented, they need to focus on the market, what the market is doing, bigger than just stocks and real estate. It's literally on what your area is doing. So you can always understand what's the pulse of what's things doing. So when you do want to get involved in investment, you can pretty much already have the gauge and have the ability to be able to sense out certain things and use, your personal instincts, because gut feeling a lot of times is better than having book smarts and just looking at numbers and saying, well, numbers say da 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 and statistics say da 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 da. It has to be ability of where you can find either lending, funding, or some type of ability to acquire either new businesses, new assets, or new securities, and pretty much find out what's going to be your strategy route in order to get a consistent yield on your money that you put in, and to ability to understand how to limit losses, understand what you need to be able to do when the market does flip. So you got to be very in tune. You got to be very in tune of what everything is going around you, because your market can change the fastest out of everybody else's market, because you got 50 big cities and 17 out of the 50 big cities are pretty much just the areas of markets where properties is up 40% of the year, 20% minimum. Oh man, it's never too late. It's never too late. But I think you got my personal, man. I think you can be able to contact me, so we can be able to talk business we can be able to talk business when it comes to those areas. Because if I'm not mistaken, the Philly area got a lot of development coming through as well. North Philly got a lot of development. I don't know what they're gonna do with Camden. I know downtown Newark is gonna have some development, but I don't even know if they're even gonna touch Camden. I believe Camden is, if I'm not mistaken, geographically in the Philly area, near the Philly area. But people just have to understand when it comes to their market, you have to understand where's the developers. You could just Google search them. The only one I mention of the tools of PropStream is you can find out who bought it at what date, at what price in that area. Because you can literally do a hack where if you see an area where it has a cash transaction, contact who bought that by skip tracing tools. You got to figure out who owns that LLC. What's the phone number? Contact them, send them the deal. That's literally a hack where you can be able to get involved. Canton, South Jersey, okay. Same area, okay. Thank you for some confirmation, because I didn't want to get that incorrect. Because with real estate, location. People need to get involved when it comes to those areas, because those areas of where development is running. Because Patterson, New Jersey, is getting more development. Downtown Newark, where the opportunity zones is at, where you got about 5 opportunity zones in that downtown area. Pretty much 10-year tax cut. Pretty much the people that put in their funds in those areas or invest into those areas, they pretty much got that. They pretty much got that tax credit or that tax cut. They can be able to leverage the money that they don't have to spend to reinvest. Pretty much stockpile on some assets like they've been doing. Right next door across the Delaware. Okay, the Delaware River. Okay. So people just need to understand Chester. Yeah, matter of fact, Chester, PA. Actually, Omni and the Hellcat was actually talking about doing some investment in Chester, PA, because of the tax cuts, and the city is going to do a 20-year tax abatement. So if you pretty much invest in commercial property in those areas, you get a big tax cut. So Chester is getting some development as well. Chester, PA is getting around $125 million, up to $125 million to someone that can be able to supply some jobs. Newark's across the water from NYC. Delaware is outside of Philly. Okay. Because I noticed that most of the people that are tuned in are from people from the East Coast. So I got to get more diligent when it comes to one, the job supply or job loss. 2 and 3, figuring out where is areas of the biggest change is heading. 4, who is buying these properties and assets, because you could potentially send them a deal. So you can benefit and capture those transactions and make sure you benefit off the payments off of just sending them deals. You, as a person that has the ability to be in those areas, you may send them deals where they don't see, because a lot of corporations and companies or people that are investors, they're either so big they didn't see it, or they're too little where they can't afford it. So if you're too little and can't afford it, give it to the ones that are so big and can't see it, and negotiate it and get a fee off of the ones that are so big they couldn't see it. Because people that are just driving around can be able to see vacant properties and just do a bird dogging. Get into those areas. Okay, bro, genius, you. Okay, so you pretty much showing what went green today. Okay. So Delaware has tax advantages. So people that create LLCs in Delaware, people like New York bigwigs and developers and financial market people, they create their LLCs in Delaware, where they can be able to get some tax advantages and corporate anonymity, where they're pretty much somewhat lawsuit protection. Create their trusts there, the private holding companies there, LLCs there, C corporation, S corporation, pretty much all in Delaware. all in Delaware, or having age corporations in Delaware or Nevada. In those states, a lot of structure and tax advantages when setting up there compared to setting up something of California, where you got to pay $800 a year in LLC fees just for the privilege of doing business in California. You got to pay $850 when doing your LLC. When you do the right thing in California, yeah, a lot of corps on paper in Delaware. Yep. A lot of if anybody have any type of questions, lay it on me. Lay it on me. Lay it on me. Can I create my LLC out of town even without having an address in that state? Yes, you can be able to do it. You can create your LLC. Well, here in Nevada, you got people that do the same thing when it comes to Delaware play. They don't live in Nevada, but they got a registered agent in Nevada, in Las Vegas, and it's literally an agent that pretty much will have a setup where their address will be listed. So that'll be the listing address of the LLC. Opening a checking account, you're gonna have to fly to that state and make a trip of opening up that checking account. In New Mexico, they have it where you can create a LLC, and it's similar to Delaware. Matter of fact, people think it's better than Delaware, where you can create an LLC without giving any identification. I think certain things are going to change with that, but in New Mexico, they have it where you can create the LLC. Pretty much the stuff that's on paper, like Blaze is talking about, lots of paper. Being in Delaware, you can literally leverage the fact of you not being there. The registered agent can be that person that will be someone that can be a assistance to you. Because if you're in the East Coast, Delaware is usually the move when it comes to creating an entity where you get tax advantages and certain type of setups. But if you don't have the capability or didn't have the knowledge of Delaware, you would create a private holding company and you create an operating company. So say if you create an LLC with LegalZoom, they'll give you a Bank of America reference. So pretty much when you create the LLC, you get a Bank of America banker. And with that Bank of America banker, they would say to you, when you say that you're getting with high ticket drop shipping, preferably clients that do high ticket drop shipping with me, I would prefer them to be able to get a larger bank account of a private holding company, an operating company. So pretty much all and a merchant account. So with those three accounts, the merchant accounts, those would be the day-to-day transactions. The operating account would be the checking account. But the private holding company is where you can store the assets. You can store certain type of cash. And that's lawsuit proof due to the fact that the private holding company cannot be sued. Warren Buffett has a private holding company when it comes to Berkshire Hathaway. Bill Gates has a holding company when it comes to the Gates Foundation. Mark Zuckerberg has a holding company when it comes to Facebook. It's pretty much a different entity where its only thing its purpose is to hold assets, not for day-to-day operations. It doesn't do business with the public. It's pretty much a holding cell for your money. It's kind of like a private trust. Well, it somewhat maneuvers in the physics of a private trust or a family trust. Yeah, Glenn. Glenn does talk about private holding companies. That's actually a corporate structure where you can, how can I say it, compartmentalize your entity, where you can be able to structure everything based off of what's operating, what's not operating, what can be sued, what cannot be sued, which state has taxes, which state doesn't have taxes, which state is favorable when it comes to hiding the owner or making it where it's not it's not easy to find the owner, for a lawsuit, because you got a lot of people that's lawsuit happy, that pretty much trying to figure out who is who so they can sue you. So with a holding company, that's pretty much aspects where it's tax savings, tax strategy, and also properly storing assets, because a lot of people cannot risk of commingling assets into one entity. Because like if you have a holding company, if I have an oil and gas company, I don't want my LLC to be connected with my apartment building or my tech company. All right, Keystone, no problem, man. You got my phone number, man. We can chop it up about business, and we can be able to move forward on that. But like I was saying, I wouldn't want an oil and gas company that's pretty much connected with my tech company, that would be connected to my apartment building, that's connected to, say, a gentleman's club business. No, you're doing it the wrong way. Corporate structure, because if somebody gets shot and killed in my gentleman's club, now my oil and gas company is liable to lawsuit, meaning that they can impound my assets, impound pretty much everything that involves of what I do. So that's why you don't let commingling of assets dictate and dominate certain stuff. You have to make sure that everything's compartmentalized. People would say departmentalized. That would be used for business credit or corporate credit, where you get a $1 million credit line and use credit unions to be able to be a good access to get some loans, credit card stacking year for year or year per year, in order to be able to use the business credit to cash out for acquiring more assets. So pretty much your personal doesn't get hit, and you can use pretty much credit unions as good lending, because you got DCU, so that's Digital Credit Union. DCU Credit Union is pretty much lender friendly. Anybody that has contacts with anybody with Navy Federal, if anybody needs someone that can get you in contact with Navy Federal, definitely get in contact with me. I could be able to help you on who is involved with Navy Federal that can give you the referral, where you can be able to open up and get $25,000 in business credit. Mocha Mom, respect to you, Mocha. I definitely appreciate your support. I definitely appreciate your support, Mocha. But when it comes to the diversification of what your LLC is supposed to do, having a holding company kind of gives it a layer where you're not commingling assets. If one business go under, that doesn't get affected. If somebody sues you on one business, they don't have the aspect where they say, oh, you own this, that, and the third, and it's valued up to $5 million. Let's take it. You got money. Let's take it. With an LLC, that's pretty much separate from each other. You don't have to deal with commingling of assets, but a private holding company would be good is if real estate, say if you have commercial buildings that's intoxicated of the public with either clubs, bars, gentlemen's clubs in certain demographics and areas and locations, I would say holding company, you can store about 10 properties per holding company, or pretty much have it where if you have 100 LLCs of real estate, you can commingle all in one, and you can leverage the loans and get some more line of credit to be able to do something when it comes to getting more access to lending, to reinvest and pretty much reinvest in stockpile assets and accumulate a higher return on investment. Say if somebody is involved of using other people's money, Angel Connect. People need to use Angel Connect when it comes to angel investors. They're a Canadian company, but they pretty much lend out to people globally. You use LivePlan for your business planning. So LivePlan can be able to help you with number crunching, creating a business plan where it's well structured, well tuned, and you can be able to get some financing off of other people's money. And you can be able to do the number crunching where you set up terms of 5 years, 5-year contract with your angel investor, 5% monthly return. You can pay them out quarterly or annually, and set up the terms where it would be a partnership that's term partnership. So you pretty much pay their money back and some, 5-10% a month when it comes to your investor. When you're raising money with Angel Connect, I have a business client. He pretty much is going to get 50,000 in financing off of using Angel Connect and using Live Plan for business, for his business planning, number crunching, estimates, because it's going to be all questions that your investor is going to ask you the questions. What's the numbers? And you also got to know how to deal with certain different type of investors, because you may have an investor that's a passive investor where he sends you the money. He pretty much wants to see the payment at scheduled date. Then you got the active investor where he sends you the money, but he wants to get active. He wants to actually help and provide some type of resources when it comes to what you may need. Then you have the third investor, the micromanager, where he gives you the money, he or she gives you the money, and pretty much hawking you down and trying to figure out what's going on every step in the third. But when it comes to Angel Connect or using angel investors in general, you have to be able to use a detailed business planning where they know when their estimated return, pretty much their dividend payment, plus they have equity in the business. So whenever you do sell the business, before it can either be before the 5-year term, it can be an aspect where your business is cash flowing in the first 2 years, and you can be able to sell in the third year. They still have ownership in it, so even the contract can be 5 years. You still got to give them their equity share. You got to give them their percentage. You send them the percentage, and pretty much you on and off on your way. So pretty much with selling businesses to a multiple, say if your business was worth 200,000 and it's in an industry where at its highest it could be sold for a 12 multiple, meaning that because certain ranges, like with e-commerce, you can sell your e-commerce store for a 5 multiple. With certain industries, you can sell it for 12 multiples. So if it's 200,000 on a 12 multiple, $2.5 million, 2.4 to 2.5, that the business owner can get cashed out with a business broker that connects business sellers to business buyers. So plus, the business broker probably wants a 5% fee, which 5 to 7% fee per deal that you sell and go through them, which, business brokers pretty much, you gotta find businesses directly. You gotta be more direct to the owner. So you gotta be more diligent on how to get in contact with the owner so you can sidestep a middleman when it comes to that. So you try to be the middleman to make sure you make money. But when you try to save money, you try to cut the middleman. So you be the middleman to make profit, but you cut the middleman to save money. But with you being the middleman, you got access to the data and information before anybody. Because like I said before, corporations and developers, they're probably so big they didn't see it. But you're probably as so little that he couldn't afford it. So you commingle the two. You get on an aspect, we negotiate something. You get a fee, assignment fee, commission, preferably assignment fee over commission. With a commission, you're pretty much tied to them as like an side employee, which it should be a partnership, because it should be an aspect of more of a joint venture JV deal than an aspect of employee. That's pretty much how artists in the music industry get messed around all the time, but not properly negotiating the terms of, I want a JV, plus I want distribution, plus I want marketing to be paid for the corporation business like Jay-Z did when it came to Live Nation, plus I need an aspect where I can get some type of back end money, some stake. So pretty much, how can I say, you're sacrificing cash advance for equity when it comes to the music industry type of model. That's why you got people like Master P, pretty much multi-millionaire based on the aspect of an 80-20 deal. 80-20 deals, and pretty much he keeps 80 they get 20. He has to be able to make sure that everything cash flows, make sure that Mia X at the time, Silk the Shocker, make sure everybody on that roster and Snoop Dogg at the time period can be able to make all these records in a fast, quick time. So he can be able to make $400 million in gross and only have to send $80 to $100 million to the big industry corporations. But when it comes to what you would do, you would have to negotiate a deal when it comes to any aspects of real estate, general business, music industry business, of knowing what your worth is, and knowing how to be able to negotiate that worth, show your leverage, show the abilities of you can be able to get access to certain things quicker than somebody, showing the aspects of you can be able to link up with somebody, have a partnership agreement, and have a promissory note just in case to protect you if certain things doesn't go down that needed to go down, where services was rendered or a product was pretty much sent, but they didn't compensate. You got to make sure everything is documented so you never get swindled out of money, or you have some type of protection where something goes south very quickly, because you have to be able to protect your capital investment off of the aspect of the promissory note. That's the whole premise. So people that have businesses and they want to be able to sell it for a multiple, you got to be able to understand of negotiating what your worth is important. If you can be able to have an aspect where you have a business built up and you can be able to find your buyer without having to deal with a middleman that wants 5% of pretty much the value of the business being sold, you got to do everything direct. Business groups, corporations pretty much do these fundraiser events. You have people that have golf course club meetings, pretty much aspects of lounges, business lounges. It has to be networking of an aspect of digital, of using LinkedIn, and also being inside the real world and getting in contact and getting in people's faces and sending them deals, asking if what is your preferred investment. If they're in that type of niche, that's why you got to do research on people. You got to figure out who people are. So when you do have the ability to send them deals, it can be mutual beneficially. You can be able to leverage them for loans in the long term. You can leverage them for the aspect of who they know, connections off of referrals. And you can leverage them again when it comes to using other people's money. Where when you do have your capital buildup of using other people's money, you can be able to put in a down payment of estimated numbers and use their money to max out and acquiring more assets. So using other people's money is pretty much like the golden metric of people that are circulating money, people that are doing commerce and creating real businesses. So you use Angel Connect, you use Live Plan for the business planning. Angel Connect, 300,000 investors globally. Negotiate the terms, getting Zoom calls with them, getting phone calls with them, get a close, tight rapport with them, and be able to figure out what can we be able to do. Where if you need an e-commerce business funded, use Angel Connect. If you have a real estate investment, see if you can use Angel Connect. It has to leverage everybody's money. You have to leverage everybody's money. You got to be more diversified in your information to be able to be more knowledgeable in that industry, with being in the industry or without being in the industry. If you're trying to crack into an industry, do a JV with somebody that's in the industry but may not have the funding but has good credit potentially. Use Angel Connect for the outside lending, or use credit funding companies like JDM Capital Solutions and Capital Cash, and pretty much understanding of I need funding. I have a business plan. I just need funding. You got to leverage the language of business, of terms, of what percentage would they get back, at what time, at what's the pay rate. And if you are in a business where it's market conditions is kind of shaky, have a contingency plan on the contract stating that if there's any type of market conditions outside of our control, we as a business need to have the security to be able to put money in escrow for protection, protect a good chunk of the capital investment, or some type of safeguard of where we can be able to pay you back either in double when things does be able to make it in turn. That's why the terms will be 5 years, 5-year terms, 7-year terms. You got to make sure that it gives you enough time to be able to kind of react of anything that's out of your control. So things that's out of your control, you would have contingencies of if this, that, and third happens, we can be able to work out a term where we can be able to say, well, a lot of companies would just put insurance policies, pretty much just get rich and get fat off of insurance policies. A lot of corporations and companies that are dealing with either economic loss or some forms of downturns, like music industry, they leverage insurance policies on everything. But you have to be more of a business-minded type of person to understand things can go south, so insurance policies are needed. And if you're in the stock market, inverse ETFs are needed. If once again you're in the stock market, short puts or betting against the market, credit default swaps, you gotta figure out what can you do to be able to make some money on the downturn. How can you be able to make money off of the market going sideways? So with real estate, the situation is gonna get higher and higher, it seems like, but you got to find a margin and wedge of finding the small pockets of people that will sell to you at a discount, that will be able to negotiate seller financing terms, and that will be able to take the money for a discount. You could be able to use the money that you save to put into the asset, fix, flip it, refinance, or fix, flip it, and sell it. But I pretty much ran my mouth for long enough. Respect to everybody that's listening. Anybody that wants to get in contact with me, my email is creditbuilder475@gmail.com. And also, if anybody wants to be able to get in contact with me as well, my secondary email is businessdevelopment1324@gmail.com. And people can be able to get stock lists, access to grants, and also credit repair and credit funding companies that I use when it comes to my LLCs. People need to create their LLC, put some credit on it, get some trade lines, hell, get a credit sweep on your personal. And if people are going to use CPNs, please be responsible with your CPN. Please pay back everything that you do spend on it. If you're going to get $50,000 in CPN funding, please repay $50,000 of your funding. Wait a minute, creating an LLC requires EIN. Can I use my existing EIN, or would I need to create a new one? You can create a new one for free. You can create a free EIN. You can literally go on irs.gov and create your EIN, and you can be able to use that EIN for your new LLC setup. So yes, you can just create an EIN on irs.gov. Let me type that down for everybody that's pretty much listening, and so people can get a good reference of what I'm talking about. EIN at irs.gov. Okay, you can literally go on irs.gov and you can be able to get your EIN. So when it comes to creating an LLC, you can literally just have it where you don't need an EIN. You just need the articles of organization, your operating agreement. You send the information, but if you need to create the LLC, the LLC packages at LegalZoom is more affordable, I notice, when it comes to getting everything streamlined and getting things under 10 days. But make sure you create your LLC correctly. So make sure that your operating agreement, if it's not started as that way, make sure that you do kind of get the operating agreement kind of remixed a little bit, meaning that you have the four Ds of the 4 Ds when it comes to departure. So you got divorce, death, dispute, dispute. So you got death, divorce, dispute, and disposable of assets, but you have to make sure that your LLC is protected. So with the divorce, prenuptial agreement, of course, with departure, you got a partnership agreement where it's pretty much laid out of what's pretty much the needed recourse of set amount events if the events happen of either death, departure, divorce in the family. Because when you have a divorce, that means assets get split up. So that means business partners will get affected because you got divorced. So that means if you had a business that was 250 million, and pretty much you're going to put in the stake that you own of that 250 million of 50 million, then that means your wife can get 25 million. Hence that we got to break up the LLC to be able to make sure you and your wife is compensated. So that's why you got to make sure your LLC and your operating agreement has to be structured where if you're going to add outside people, or if you're going to add outside people in a relationship, you got to make sure everything is pretty much well structured. So, you got, and the same thing with women too. Same thing with women, because you don't want to wind up like Adele that got to pay her husband $100 some odd million just for being in the same room. So, you gotta make sure that everything is well tight, where, you have lawyers for your significant other, and pretty much the judge can be able to record. So make sure that nobody was not under duress, nobody wasn't intoxicated, or nobody wasn't in the same state, let alone the same city as that person. So you got to be able to make sure that you protect your money. Men and women got to protect their money when it comes to partnerships, businesses, and also any type of affiliation with somebody. Not even really a business partnership, it's just affiliation. Because whoever you're affiliated with, man, you gotta be able to make sure that there's a proper setup of communication and also due diligence on your part. You got to figure out who is he affiliated with, who he's connected with. Does he got money? Do he got money? Can he be leveraged? Can she be leveraged? Who can be leveraged? This is literally a game of who can be leveraged, who can be able to provide a value to you, and who can you provide value as well. Because people don't just do business with random people unless there's extreme value, with extreme information, with extreme ability to get access with certain things that they can't get access to because you negotiated a contract first that can be assigned. And you can use the terms of and or signee, or and or assignable in the contract, and or third party, or and or third party investor, whatever terminology that shows and or with the ability of a third party or assignability. You're pretty much protecting your contract, you're protecting yourself, and you're making sure that your equity, like with hip hop musicians, they pretty much have the aspect of their IP. They don't have access to their IP. You have people that has to do re-releases. Like you got Cameron, the rapper, pretty much said he had to do certain songs over again in a studio and did a re-release of what he did in that studio with the masters that he do own. Same thing that Taylor Swift did in a bigger scale. Taylor Swift did the same thing as well, just did a re-recording with masters that she do owns. So same is with IP. You got to have the ability to own your creativity and negotiate. Oh, okay. Assignee, yeah, I see that word on real estate purchase and sale agreements and joint venture capital contracts. Yes, because it can be assignable because you got a third party. You got either third party that can be the cash buyer, the silent investor that was pretty much the person that funded the previous deals outside of you that you don't have no knowledge of, so they can be able to assign it to them to be able to compensate of previous deals that they pretty much was given access to. But you should look in tax lien properties down south. You can, well, we already went over the tax lien situations down south. we already went over that, but that's definitely a must, because there's aspects where people up north in the West Coast that can be able to buy up a lot of stuff in Texas, Louisiana, and do some big fix and flips in Atlanta, Georgia area, College Park, Mechanicsville, Alpharetta, those areas. But yeah, man, so there's financing that can be made. Respect you. Oh man, respect you. Shout out to you. O's appliance repair, respect to you as well. But there's definitely aspects where people that can be able to leverage their incomes. Do you think franchises are good? Well, franchises have strenuous type of relationships, because with franchises you have aspects of you can only own so much in a certain area, or you only have certain access to a certain area. I ain't against it, because if I saw the McDonald's franchise for sale, I had the money to afford it. Say if it's a seller finance type situation. You said 7-Eleven or Subway. Yeah, I ain't against the Subway or a 7-Eleven. Cameron owns Subways. Speaking about Cameron and him doing a re-releasing of his project and making money off of his old music like it was new again, he actually used the money to buy some Subways. But you got to do it in gym areas. I would only put a Subway, to be honest, near medical facilities. So in Houston, I would put it near Lamar University. If there's any area near Lamar University, I would try to put a Subway there. I would try to put a Subway, any type of medical facilities, gyms. Put it near gyms. People put McDonald's near schools. So that's something that, if you notice, that they put McDonald's near schools and capture them transactions of their parents and any type of transactions of people just walking up, going to a suit from that tuna scandal. Buyer beware. Oh, okay. Okay, see, Miranda, thank you for telling me that. See, I didn't hear about the tuna scandal. So what? They selling bad tuna there? They selling bad tuna? That is crazy. That is messed up. They literally have bad tuna. Banana Kings is in New Jersey. I know in Dallas or Houston, they would love it. For real? Oh. Sal, you need to join the panel. You need to join the panel. I have too many questions for you. I have literally too many questions for you. I know we be able to chop up business stuff. That's funny, tuna. I used to like tuna, but I never really liked the tuna, to be honest with you. Like, I don't like potato salad. Can't stand potato salad, to be honest, but to each his own. Sal, you need to come up, man. You need to explain yourself, sir. And thank God for Miranda talking about that tuna scandal, because nobody doesn't want to get an asset that was 750 guys making $60,000, $80,000 a year for it to pretty much get tanked in value and less cash flow because of a tuna scandal that motherfucker could have easily researched. But you know, it is what it is. It is what it is. But Cameron, he bought those subways. It's like 3 or 4 years ago. And with franchises, usually people have the aspect where they can use the cash flow to buy more franchise, depending on the franchise agreement. Because depending on that franchise agreement, if they have it where they want to restrict you of either buying more in a location or have it where competition is so fierce, where you got like about 4 or 5 different franchises in the same vicinity or in a block, close to a block radius. Block to block radius, my bad, block to block radius. So as long as the franchise terms is something that can be either negotiated or flexible in general, where you don't really have to negotiate too much, you can just be able to get the financing approved, your pre-approvals, letter of intent, proof of funds, all that pretty much geared and set up. You should be on your way good to go. Should be on your way good to go. But you know, people just got to be more knowledgeable, because I've tried to find out if the Waffle House has any franchises. No, you don't have no franchises. Waffle House does not, and Waffle House is a profitable platform. Yeah, I do not like potato salad. Yes, if somebody cooked me some potato salad respectfully, I would not. I would tell them that I can't, because I don't want to throw no food away. Yes, and Mr. McDonald's franchise agreement is correct. Yeah, you know, franchise agreement, they have it where they want you to be already a millionaire. Buying McDonald's franchise, you already got to be a solidified millionaire, because they want you to have the ability to have $1 million in liquid cash, $5 million in total assets. So that means if you have an apartment building, you can pretty much leverage the apartment building to get some financing on some McDonald's stuff. But that's the key of commercial real estate, because commercial real estate springboard a lot of stuff, from franchises, corporate credit, large high limit corporate credit cards, where you got the black cards that got like unlimited credit. You know, people gotta understand what business can be able to generate a good yield. I don't know if it has changed, but you do need at least one. Yeah, you would have to have liquid tax returns as well, because you know you can't have just $1 million just floating around. You gotta have some tax returns. $5 million in assets. Why don't they put Checkers directly next to her Popeyes across McDonald's from the same street in my city? You don't get what? Well, it's competition, because they know in that shopping center a lot of commerce happens. Because if you got a shopping center, and don't let it be around near club areas, because in Miami you got Rick Ross making money off the aspect of his franchises is very close to King of Diamonds strip clubs, so he can get the money off of people coming out of the club and being hungry and they need something to feed their face. He can capture those transactions. So if people can do aspects like that and see their areas, so when you say go down south, flock down south, it can be an area where you put certain stuff around the club areas, franchises, a burger spot, create your own burger spot, taco place, something where it's somewhat 24/7 and 20 drive-through access, because you gotta make money off of those people that are literally being out there at 2 a.m., 3 a.m. Because that's pretty much how Rick Ross and Checkers pretty much got a good winning formula, or putting franchises near college towns, There are college areas, university areas, medical facility areas. You gotta get those transactions. You gotta make sure that you're in position and your business is in position to be able to benefit off the commerce. So yes, the Checkers will be next door to Popeyes. That'll be across the street from McDonald's on the same street. Yes, you'll literally have wacky combinations like that all around people's cities. And it's probably the same owner. It's probably the same owner that can get a loan for this business for probably a Checkers that probably worth, I don't know, 500, 600,000. Get access to the Popeyes for 500,000 and the $2 million McDonald's. You'll probably be right, since the city hospital is 2 blocks from them. I told you. I told you. Anything that's in their medical facility areas, man, they pretty much gotta get those transactions, man. People are needing food at lunch. Damn near every day. Okay, an automated car wash. What do you think about that? Now that you mentioned LLC in Delaware State, I'm going to look back into the phones. Well, look back into the phones. U.S. mobile phones and everything in Brooklyn. The Russian guy. That's my dog. That's my dog. Get in contact with him. Negotiate the price at a fixed rate. The more bulk that you buy, the more of a discount that you can get. You can get the iPhone 11s, the iPhone 12s. Be able to get those for around $500, probably $600. And if you can get that negotiation off of doing drop shipping, if you can negotiate drop shipping where you capture the transaction and pretty much send them the address and keep the difference, you pretty much got a winning model. So just keep me informed on that, man. I'm gonna keep on making sure I do some research. He never ends it. Well, okay. So I'm gonna have to call him and we're gonna get that figured out. We have to figure that. Oh, you lost his number. Oh. Okay. They need to nuke Camden. Needles on the ground everywhere. Oh man. Camden is like that. Camden is like that. That is funny. Camden. I don't know what they're gonna do to Camden, man. Because they're gonna get Newark. Newark is destined. Then you got developers that want little Dominican Republic, Washington Heights, the Mecca of all Meccas. They want the Mecca of all Meccas of Washington Heights. So, Washington Heights is an area that they want to take because it's nearby water area. So that water area is pretty much what they want. This, matter of fact, let's look at Washington Heights real quick. Washington Heights. And I see. Okay. Let's look at the map. Because they want that area. They trying to take the area. They want Queensbridge today. They want Nas's area. So you got Washington Heights, Queensbridge, where Nas is from, Marcy Projects, where Jay-Z is from, 125th in Harlem, East Harlem. And areas of, so the Yuppies is pretty much infiltrating those areas. And they're trying to take over assets in Washington Heights. Renaissance, man. Before I let you on, man, I gotta make sure it's you. So if you turn on your camera, I'm not gonna let you on with the camera on, but I gotta confirm that's you, man. I got troll that will copy everybody's profile, like that's the real person. But if you can turn on the camera, make sure that I know it's you. Give me the thumbs up at least, respectfully. But you got Washington Heights pretty much gonna get so much development potentially if the things fall into place. Renaissance, man, can you hear me? Renaissance, can you hear me? I want it to be Renaissance, but I'm scared that it's a troll. Okay, you can turn off your camera, sir. Okay, you can turn off your camera, sir. Now I know it's you. Okay, that's funny. The Dominicans is about to be angry, bodega.
Hey, what's up, Real?
He said bodega.
Can you hear me?
Yeah,
Hey,
I can
can you
hear
hear
you.
me?
My bad. I
Okay.
have to do that. Yeah, I can hear you.
Okay, wait, what? You said
Yeah,
you
my
got
bad, man.
trolled.
I have to do that with everybody, man.
Oh,
Yeah,
okay, you
man.
got
I
trolled.
got trolled, man, where the troll was copying everybody's accounts.
Oh, wow.
Troll
Nah.
copied everybody's accounts. So somebody that I thought would be like, okay,
Wait, wasn't that you saying just people like
my
flagged
city.
down your video or something? Like you couldn't figure out who it
Yeah,
was,
man,
though?
people couldn't figure it out. Couldn't really figure it out, man. So yeah, man, I have to deal with situations where I got to be more cautious. But Wagner said my city used to be worse than Camden, and Newark now is being gentrified. Man, it's crazy expensive here.
I bet people trying to get out of New York, like out of the city.
People, it's slowly already starting to get gentrified transportation wise. Oh, they talking about. Matter of fact, you're on your computer, right?
Yeah.
Okay, I'm gonna share your screen, and I need you to research Washington Heights, New York City map. So Washington Heights, and we need a map. It's little Dominican Republic. It's little DR because they got the Waterview area that they want. They trying to take the water area. East Orange and Newark, New Jersey is where Inglewood, California people go to. But that ain't my business. That ain't my business. It's so funny. So funny. He said it ain't my business, but you got Washington Heights that I need you to just research for me, and we can be able to share your screen, and we can look at a couple more real estate markets. But that's the area that they wanted to get that area bad because of the water area. Anything that's near waterfront area, they trying to take. So if you got deals, anybody that's listening, if anybody got deals in waterfront areas, you better send it to them developers and make money off of it because they're gonna take that area eventually.
But you said you want me to share my screen?
They're gonna take the area. Yeah, I can share your screen, so I can share your screen and we can be able to all look at it. Okay. I mean, the Heights is prime location. You can get many areas around New York and New Jersey easily from there, and even New England as well. So they're trying to get those areas. So we got to see the map, and we look at the map, and we follow the map. So the area boosts commerce. Yes, the area boosts commerce with transportation. That's pretty much like a streamline of generating more commerce, more activity, more economic activity flowing through. So
I gotta change my screen
how do
settings
people?
Because it's not my
All right,
computer.
no problem. It says, okay, no problem. No problem. Okay. It says here, how do people get deals in NYC? I can't believe it yet. Damn, that's major shit. Well, you gotta get deals off of either looking at the seller financing, like I mentioned, for sale by owners, or the property assets that's been on the market for 70 to 100 days. Now, if you're gonna do some off market deals, Sal, you're gonna have to do some Facebook ads of we buy houses. You're gonna literally have to do that model to figure out all the off market properties. Or if you want to send somebody deals, if you got a deal and you're trying to send somebody deals, look for the advertisements that say we buy houses. I keep repeating myself, but one day you're gonna learn, Sal. One day this is gonna latch on eventually. Stop by John's Fried Chicken and give me a everybody a pollo al horno and Moreno Maurice. That's funny. Sal, you need to come on the panel. You need to come on the panel. Exactly. It would bring 6-figure residences and prime locations for no businesses. See, they're trying to get that location. They're trying to push people out by waterfront areas. Because in California, you got San Pedro, which used to be the Mexican hood. That's pretty much now richer, upper class Mexicans that pretty much owns San Pedro and have properties in Santa Monica and aspects like that in those areas. But people need to understand of what the market is doing, of where our developers are buying, because a lot of the times developers be having their whole agenda plan listed on easy as Google. You can find that online PDF form of where that they're going to bring investment or where that new construction is coming in. People will call planners. A lot of people will call a city planner and pretty much ask the city planner of where is development coming in and ride that development. So we're going to share the stream and we are going to look at Washington Heights, Little DR, New York, New York. So when it comes to that area, they want that location really bad. Really bad. They might put multiple hundreds of millions of dollars into those areas. There's definitely aspects of new businesses that would come. Commercial properties probably get restacked. So it'll probably be torn down. Then you have
Wait, could you see?
you have assets that's pretty much people. Yeah, I shared your screen.
Okay, could you see the map?
Screen. So when it comes to well, not anymore. You gotta
Okay.
request for me to.
Okay, now my computer's moving slow because of StreamYard.
Yeah, StreamYards be moving people's stuff kind of slow. I wish I was. Well, you can create revenues of insurmountable income off of just finding where the development is at, like Little DR, Little Dominican Republic in Washington Heights. It probably be 3 years, I believe. They will do the Heights like they did Harlem within the next 10 years or so. Yeah, unfortunately. Okay, I shared your screen. Okay. Is for the people that's looking in, is the screen dark? Is it black? Because my screen on my end is black. Okay, now I can see. Okay. If we could find an overhead view of
This is it. It looks like, yeah, Hyde Park Bridge and the Bronx right across the water.
okay. They want that area. They want that area bad. They want that area bad. Oh, they want that area bad. Okay. We got aspects of development in those areas and locations. Okay, and we're gonna look at homes. If we can find homes near the Washington Heights area for sale, so we can see what the prices are now compared to probably in 2 years when it skyrockets. So people can't say, well, how could we benefit it? Well, you because they got aspects of getting into those very quickly. So Washington Heights homes for sale. Well, homes near Washington Heights, preferably. Because if they're going to bring big boy development, anything around that area, pretty much their value gets risen just off of just the same repeated type of thing that they do when it comes to big development. But hold on, I'm gonna give you enough time. I don't know if it's my screen or your screen. This is definitely no homes, mostly apartment buildings. Okay. Well, where is the closest? Well, Marina gotta be the map for us now. Where it would be the homes where it starts? Well, where the homes end. So when you're entering in the Washington Heights, where does the homes start ending and the start of Washington Heights start coming in? Where would it be that location? Is dead ass across dead ass across the way. So homes in the Bronx, I guess, or are
Well, it
they
looks
gonna?
like those are
I'm trying to
streets
figure out.
too.
Okay.
Like you got 169th Street, 176th Street, 171st Street. I'm
Yeah,
assuming all that in pink is hot as Washington Park. I'm sorry, Washington Heights.
That's funny. Look at homes at Fort Lee. Oh, okay. Fort Lee homes. Because Fort Lee is across the way from the Washington Heights. Okay. Fort Lee, New Jersey. Cliffside Park area. It's like 15 minutes from. I'm gonna write all this down. I'm gonna have to get my real estate developer on. I gotta write these streets.
Not real. Did you see the FHA is looking at changing the rule, or I think they may have actually did, on like how student loans are calculated into debt income ratio?
Yeah. Yeah, I saw that. Yeah, I saw that.
They were talking about how that.
I think they are.
They're talking about how that could boost Black home ownership.
Yeah. Well, we it just got to have the scores correct, and people got to focus on their credit profile being strong, so they can be able to get them high limits that they need. So Fort Lee, New Jersey, Cliffside Park. So we're gonna look at homes in the. Hopefully, we're gonna find certain situations. You don't want to buy a home in the Bronx unless it's in Pelham Park. So Pelham Park. Okay, so Fort Lee. Because Fort Lee is the closest from the Heights. I remember they had a Fort Lee apartment building that was pretty much burning down Cliffside Park area in New Jersey area. In New Jersey. 15 minutes away from the Heights, because the Heights is gonna get that development in, man. They gonna come plowing through. And it's from
Now, with places like New York City, where you already got
Yeah.
like, in theory, there should never be a shortage of housing because you can always continue to build up, right? There's no limit on that.
you're gonna knock down. You gotta knock certain things down.
Yeah, but I'm saying like,
Yeah.
if you knock down and build higher, like in theory, like I'm sure that all the politics get into it because they don't want to drive the real estate values too low.
Yeah. Yeah, that's true.
Because the other thing, granted,
you got a
they
lot of
keep claiming
variables.
people are leaving New York. That's the funny thing.
Yes, because they have a lot of occupancies in the commercial buildings. Is your computer
Yes,
working?
yeah. Can you hear me?
Okay, so can we search Fort Lee? Because there's
Okay.
no homes in Washington Heights. There's pretty much no nearby homes, so we got to look at Fort Lee. Any Fort Lee, New Jersey type homes. And if they're pretty much all commercials, we got to look at seller financing, because you can negotiate something vicious with seller financing on a commercial deal. We already went over this when we analyzed the Chicago markets. I don't know if you was on the stream long enough for me to analyze the Chicago markets, but we analyzed those markets as well. Thoughts of seller financing deals, and boy's gonna take on what I told him about the seller financing. The pandemic drove people out, but remember, everything opening back up again. That's true. That's true for now, though. That's for now. Okay. Condos mostly. Condo. Well, seller financing on an apartment building would probably be the next, since everything is like condo, apartment out. If you can't be able to find at least a situation where, wait a minute, I saw something for $489. Saw something for $489. 3-bedroom, 2.5 bathroom. That was something that could probably be negotiated downward. Yeah, most of these are pretty much condos. So it's a condo market. Makes sense, but the condos on a condo markets doesn't do well in certain markets when it comes to appreciation. They always have a problem of getting somebody to buy all that inventory. They can get renters, but they can't get a full-fledged buyer unless it's international investment, like you mentioned earlier. $749,000. Wow. That home probably is going to be $1 million easily when they fully get everything worked out logistic wise, because $749 for that. Wow. probably go up to 800, 900,000. Within 10 years, I think it can be able to go up that high. What market you're in, Renaissance?
I'm in DC, right outside of DC. Like technically from DC proper, probably about 30 minutes, 20, 30 minutes.
Do you notice any development?
Yeah. I mean, when I was down taking one of my cousins goes to Howard. When I was down taking her to school, like we saw a bunch of the places right around there where they were building like new new townhomes, all of that in the area. As well as like where I'm at, sort of a little bit north of the city. Like my apartment complex that I live in, it was brand new when I moved in about a year and a half ago. As well as right next to the place right next to me, the little area I literally saw them build like townhomes there. They're about I'd say about $700,000.
Okay.
Yeah. They literally I literally saw them break ground and start building them.
Well, let's look at seller financing in DC, because I think that the Fort Lee market would benefit off of Washington Heights pretty much getting repositioned. I think avenues of the market can be able to benefit off of the Bronx. I don't know, the Bronx they have the Yankee Stadium, but the Bronx and Yankee Stadium is still in the hood. So that's.
Are you at your computer?
That's something I found kind of interesting. Yeah.
Can you share yours? Because
at my computer, but I'm writing stuff down.
Okay.
Okay, no problem.
Yeah, only because with the StreamYard's going and like the sound keeps cutting out. So like I hear you and then you cut out. I think it's because I got my screen sharing and trying to search. Like StreamYard's always make my computer fan come on and everything.
Okay, no problem. We do that. We do that there. But the Fort Lee market, that's definitely something that people in that area or who know of the area or have access to that area definitely try to see if we can get some off-market deals with just some marketing and advertisement running
now
running in
when
those
you talk
areas,
about
because you gotta.
Now, I know you're in real estate. Like, how much are you putting down on your properties?
Well, when it comes to what I put down, I would have to put down 20 on a JV deal. So I'm not doing it by myself.
Oh, okay.
I would do it with
20%.
that I know. Yes.
Okay.
20%. And we use the person with the best credit out of the bunch to be able to leverage.
Yeah.
Then 6 to 8 months, pretty much of renovations, then refinance, situation like that. But what I do is disposition. So I'm not acquiring. I'm literally what they would do as I capture the lead from the marketing, I lock up the contract, then I assign it to the person that would make the acquisition. So I have done a deal with 4 other people where I
so you're not trying to own and
that's why I've been live streaming.
Oh, okay. So you're not trying to own
not single families,
and like
not
and trying to rent out that way, or
not single families, not single families. No, apartment buildings, yes. Apartment buildings, yes. Because I got more tenants, economies of scale is there. I don't have to worry about if one tenant leaves and no cash flow coming in. So I would assign single family homes, and people should assign single family homes, whatever deal that they can get access to. Don't restrict it to just single family commercial. Find whatever that has equity and has a cooperative seller. Equity and cooperative seller. That's really the only thing you need. All the numbers, terms, and logistics. That's just something, just in case if X, how can I say, A, B, and C doesn't happen on X, Y, and Z. So that's pretty much of date, timing, and any type of errors or bottlenecks of a situation. Because with contractors, people are only supposed to pay contractors based off of performance or a draw of 3 draws. They can't give 100% upfront. They really can't give 50% upfront, due to the fact that they're going to be doing the most unmotivated work, and they're going to drag their heels or just pretty much walk off. Contractor do a walk off. So, you have aspects of contractors that literally knock your back porch and walk off the job. Then literally,
Oh, damn.
you're supposed to get certain things in the backyard done, and he done knock your whole back porch off. Walked off the job. Homeowner pretty much trying to figure out what happened, because he just noticed that his backyard is just crushed. Contractor just walk off the scene, and pretty much you got quirks of pretty much a contractor destroying your equity and wasting your money and your time. That happened to one person that I pretty much was doing business with. He had a story of that happening to him. Pretty much contractor just demolished the backyard porch. So you got aspects of real estate that people could be able to avoid off of just negotiating the best way they possibly can, so they don't have to deal with them quirks. NYC permits and renovations are a mess. I would never invest there because foreign companies overinflate the real estate market there. Well, we just talking about aspects of not investing. We're just sending them deals. So if it is a cash transaction that is a foreign investor, you contact them anyway, and you send them more deals so you can benefit off of it. In my general opinion, because you can't stop it. People don't got $20 billion to stop gentrification in the area. People should just benefit the best way they can off of negotiating certain stuff.
The thing is, when you start gentrifying, the only thing I would wonder is what you got to have the jobs there to support it. Like, that's the thing. Because like if you get in too many people coming in just trying to make money, that's the thing. They'll build all the luxury, and then I guess they'll bank on the luxury falling to the middle market with prices. But that's kind of what happened in Atlanta in 2008. Everyone just you had people just trying to jump in, build. And when the bottom fell out, it was bad. You got some good deals though, if you were there. I was in college still, so.
Yeah, you do have people that like to just come in and develop and didn't have no job supply, because yes, job supply is needed to be able to work out the economics to justify the rent increase.
Yeah, and not to mention too, it's going to be interesting. They got to figure out what employers are going to do on this telecommute situation, because if you got people like Mucha Mama said in the chat, like, hey, they just tell that when they need to go into the city, they take the train, but they telecommute. So if that becomes a new model, unless people just want to be in the city just to be out there like social life, people ain't got to go into the city and work like that. You might even see you seeing that that's happening in Idaho. with real estate prices. That's one of the fastest, I believe, growing real estate markets is Idaho, because people from like Cali, with how high the market is, and they're able to work virtually, they're moving out there.
Yeah, man. So said lots of my family left in NYC during the pandemic. They moved to Long Island and to the suburbs of Philly. When they need to go in, they take the train and telecommute for most of the time. You can eat good with rent in my city at $1,500 for a 1-bedroom apartment. $1,500 for a 1-bedroom.
I was gonna say that's not good. That's pretty much big city prices.
Damn, bro, that's big city prices, bro. What is my man talking about? Is
I mean, granted, that's not
funny.
I mean, yeah, nah, like, but I mean, granted, that's not like, I guess if you're talking about being in the best part of the city, yeah, but like I said, that's like pretty much going rate and like for a decent apartment in DC, if not more. Or like someone's basement. I was looking at my cousin was going to Howard was looking at is like $1,200 for a basement in a house that was near the Pentagon.
Like, you know, when you have markets like that, $1,500 a month, people would have to make $3,000 a month in order to somewhat
Nah, and that you're going to be rent. Nah, not even that, because you're going to be rent what they call it rent stressed, because you're technically not supposed to have like more than 28% of your income go to your housing.
Yeah.
So you need more like
that's budget.
You need more like 4,000. Yeah.
Yeah, that's budgeting 101. So yeah, 4,000 based by the numbers, you would probably take $5,000 to be able to really afford, make that a feasible endeavor for you to be able to put down $1,500 a month on rent. And see, people need to strive on getting a mortgage. I'd rather pay for the mortgage than a damn rent. $1,500 a month, at least you can be able to get some equity out of it.
The only thing with that is it depends on what
this is
doing.
Why moving from New Jersey is too expensive for me. Was
you're in
property
Texas,
taxes right? In East Orange is $8,100 a year. Huh?
You're in Texas, right?
What happened?
You're in Texas, right?
No, not currently. Not currently.
Okay, where are you right now?
Vegas.
Okay. Now that's a hard market too.
Vegas area. So the Vegas market is being influxed by California people. Same way how California people went to Arizona. California people going to Texas. California people are going to Florida. California people are going to Atlanta, Georgia. So, you know, it's going to be a spread of people that's going to be in those areas with new money influx. So they're going to sell their property and they're just going to pretty much post up, buy assets, and still have cash left over. So more and more people just have to understand how to raise their income, because it's affordable housing is not the solution. Affordable housing is not the solution. People are just going to have to increase their human capital and understand how to be able to provide more services, goods, middleman services, direct services when it comes to any ability of you capturing transactions, processing transactions, services and goods to the people directly, indirectly, digital, physical. It has to be people being more entrepreneur wise. Pretty much the underlying message that I'm trying to get here. Damn, Philly rich.
That are high
taking
skilled.
California with him into Nevada. Damn. Yo, California people need to stay in their habitat, man, because people are gonna get tired of California people moving all up and down the area.
Now, here's the thing. I even was talking to a guy on another channel. He was in Arkansas, and he was saying that's even driving up prices in Arkansas because people from Texas.
So Texas people are going to Arkansas as a secondary route. So they're going to Pine Bluff
Texas.
and Little Rock, or
He didn't specify, but I've always heard. That's what he said, but I've always heard people from Texas were moving to Colorado, and that all the California people were
From
moving
Colorado?
to Texas.
well, Colorado is expensive due to the fact that's like California prices in the middle of the country.
It depends on where you're at. Like if you're in Denver, like Denver proper, in some of those
Denver.
places, yeah. Boulder, yeah. Now you go out to some of these more
Mostly
rural
Denver.
areas or more of the suburban areas, yeah.
Greeley.
Yeah.
Greeley. So, you got to know the market. You got to know the market because properties could be from 400,000 to 600,000 easily with California people. Plus, you got Elon having his star base near Austin.
Yeah.
You got Starbase that's going to be developed in Austin.
Now you think there's going to be a fall in the
So
market
you're going to have
because I was seeing that lumber prices are already starting to fall.
Well, me personally, I think I think it can go up as much as the Fed determines. But I think rent moratoriums might drop it. I think rent moratoriums might drop commercial properties.
Yeah.
While foreign investors take up single families.
The other thing is, if they do something, because I've heard chatter, but I don't know how serious it is. Zoning requirements. Like some people were proposing, you should just get rid of zoning requirements because that's like messing up the market as far as affordability.
Well, zoning markets actually do a lot of protection. So you don't want a golf course to be next door to the hood.
Some people might.
Zoning, you're gonna have more instances like, well, here in Las Vegas. Well, you got in Vegas, you have Rodney Dangerfield's property that's pretty much in a gated golf course community next door of some Section 8 low income housing.
Yeah, that's kind of how Atlanta
and
is.
that's multi-million-dollar houses. That's literally next. You got golf course land. Next door is Section 8 housing. So, when it comes to situations like that, yes, it can get nuanced. It's very nuanced. It's not cut and dry. It's not something where you can look at a map and just say, oh, okay, I got it. You just look at the map at just reference of what is the overhead look and see how pretty much other overhead looks are. So, architects use sacred geometry to be able to do their building and map codes of sky towers and how everything aligned up like the stars in the sky. So, you have alignment of corporate buildings, office, retail, shopping centers. People are starting to say that they need to do rezoning when it comes to strip club areas because they notice that most of the violence in areas is based off of those entertainment niches, niches.
Yeah, that's what they after like 2000 with the Super Bowl in Atlanta, that's what they did with Buckhead. They basically tried to crack down on like alcohol sales and bars staying open to try to bring the violence down.
So, me personally, I think armed security in areas would work like they do in Detroit suburbs. And they noticed that Detroit suburbs still have people with money and they don't want to have their houses being broken into.
Yeah, I saw that.
6 vehicles.
Yeah, I saw that on Vice. They had private security. Yeah, it was on Vice. They had like a private security, and it was more just for like kind of show too. Like they had security, but like the big like armored truck that they had was more of like just a deterrent, so people knew, hey, we're there. Because yeah, like you said, you got I'm
Yeah,
sure like
it's
old
more
money.
of a deterrent.
Yeah, they had that where
Mhm.
where I was in high school, the city I was in. They had like that. They call it DTA. It was basically like these people who would ride around in little cars and just kind of observe the neighborhood. And then like they get out, if they saw something, they'd actually get out and call the actual police.
Well, these people actually have the ability to arrest themselves. They're armed. They're actually able to do citizen arrest. They actually have the ability to do citizens arrest when need be. So um, that's where maybe the slight difference is, because that's a observe and report. To be honest, that is literally no different than the mall cop. Observe and report. He doesn't even have the duty or ability to do a citizen arrest to be able to curb ongoing or active crimes. So
Yeah, yeah.
because at the end of the day, they have to curb crime to protect the real estate values.
Yeah, the sad part is we don't seem to get that in our community. Like, because I'm always sitting here thinking, when we're talking about all this gentrification, like imagine if we had built up our communities and like people weren't having to sell, like, if we actually, developed them, and now you got these people who all of a sudden want to buy them.
Mm-hmm.
You really come up.
Because well,
in a sense of
it's economics too.
But like that's what people don't get. Like they'll talk about they'll talk about like generational wealth and things like that. But it's like, dude, if we're gonna have generational wealth, which most people's wealth is in their housing, like you can't have all the crime and BS going on. Because that just messes up the property values.
You gotta mess up the property values. It doesn't make nobody want to supply any jobs. It literally pretty much outright destroys any type of circulation when it comes to any ingenuity. Because you got to have ingenuity coming through. You have to have brilliant minds being developed in those areas.
Yeah, that's when it comes
in
to
order to be able to build out a successful 20-25-year plan.
Yeah, that's when it comes to self-sustaining, when the people in the community are actually like the minds driving it, and then they can come back and basically live there and build it up even more to the next generation.
So me, I feel that the people that understand economics and capitalism has to either, how can I say, because I don't want to label this as charity, but they have to do an aspect where they can take a percentage to test out if they can supply a couple of hundred jobs in their old community, to be able to test it out to see, is this going to be the same old, or can we at least be able to save a couple of few people? Can we be able to work certain minds that are interested and also motivated into making a solid change? But to be honest, you're gonna have to probably do all that virtually. You're probably gonna have to do a virtual outreach instead of going to block to block, because going block to block, nah, just do a virtual outreach, and whoever take it, whoever that latches on, whoever that didn't in that area latches on. Unfortunately, you pretty much get the title, you get the whole influx of a lot of mega developers pretty much just overtake that area, because really, what can you do? You give them the aspect of people where they can work on personal business, corporate abilities to be able to do either real estate, e-commerce, or trucking or construction, anything involving with their hands. If you're not a person that is a technical person, there has to be so many avenues of either making business transactions possible, because wages is gonna stay stagnant. What you can do is you position yourself where you capture the transactions of those people that are wage earners, so you can be able to make sure that you benefit off of what you know, and the people that either refuse, don't know, or just don't want to know, they get left behind. They get left behind. So I send my drone to handle business for me, places like Camden, East Orange. All I need now is for drones. That is funny. To write on contract and carry box. Well, you can. Well, if you're gonna have drones that can be able to carry boxes, you're gonna need one of them. How can I say, helicopter-esque type of drones, and that's gonna be expensive. Wages will remain stagnant. 15 to 17 is not much. Well, there's people that say there should be a floor. Other people that say that shouldn't be a floor. We got the floor, no floor argument when it comes to wages. But I think, and I hate to say it, but I think you should let the market decide. Because if you restrain business and force everybody's hand, businesses get killed off. And you pretty much killed off jobs. You pretty much just try to do the strong arms situation that doesn't go through, and you wind up losing a lot of commerce in the long run. So wages will remain to become slow. Matter of fact, wages might decline. Wages might decline of the aspect of other groups pretty much getting access to those for a lower wage and taking advantage of certain opportunities, because we have 9.3 million job openings with 9 million identically that's unemployed. How ironic. How you have just as many job openings as people are unemployed. Well, listed as unemployed, because you got more people that are not in the database of unemployment. After a while, they don't put you in the data. I don't like what I have been hearing about Georgia State. If you're a low-key person, Ohio might not be bad for you, but
Man, that sounds
more industrial type of region.
I would take Georgia over Ohio any day. Maybe that's just me biased being from the South, but I don't think there's really shit in Ohio except for like
funny. So you got
Cincinnati.
They want a livable wage. They won't see a real incentive to coming back since the lockdown. Well, you got people that's pretty much saying that they made more on unemployment than they did working. So, you got that inherent issue. So it's an inherent problem that is created. And to be honest, I don't even really see too much change when it comes to I don't really see too much change when it comes to certain things of people's people that's pretty much high off the hog, lazy, or hopefully they made some money off of, I don't know, commerce, OnlyFans. I don't know, some type of money where they can be able to say, well, I don't have to work no more or something. Ohio would have you born. That is funny. Ohio would have you born. That is funny. Cincinnati is a city that has a lot of crime as well. Adrian Broner, that's funny. He's from Cincinnati, and he has a lot of scenarios where he gets into runarounds and run-ins with city gang members. I'm like, bruh, you are a multi-millionaire, and you still running around in the city, and I guess he pretty much got advice of him. Yes, it is. Yes, it is. It's definitely still profitable, but he has opportunities of buying certain homes up in the Cincinnati areas that they're going to develop, but he chooses not to. To each his own, but when you're a boxer, when you're an athlete in general, you got to diversify because 5 years after retirement is usually the time when everybody pretty much blow their cash. People blow their cash. That's the issue. I see why people in Section 8 projects wearing Gucci belts and leasing cars, Dodges, Benzes, BMWs, and they don't rent it out. They don't rent out the rental because if they just rent out the rental where they can be able to make $5,000 a month off the Beamer, they'll be actually straight. Get on Toro. But you see, their mind doesn't think economics and business and transactions because if you can get those type of cars and shit, and you on Section 8, you pretty much have the ability to be able
But you
to
probably paying
put
a
the
high ass
cash
interest
flow
rate.
on maximum overdrive. Shit, $5,000 a month times 12, that's 60,000 a year. Gross. Net wise, it'll probably be around 35, 40, 35, 40 roughly. The Dominicans and the Heights lease Acuras. I hate them cars, them little cars. Bro, I prefer to drive anything, but still, Acura. Well, I don't know if you can really get too much off of leasing the Acura, but you can add the aspects of you're taking your luxury and still make a cash flow on it because it's depreciating. So you might as well make something out of it. Somebody will pay 5,000
The
to
only
be able to
thing
ride
is,
in a damn Benz.
the only thing I was gonna say is, you just got to worry about when you lease it out, like who you leasing it to, because they may, since they giving it back to you, they may drive it any kind of way.
Yeah, that's the only problem. That is the only problem. But still, if somebody is gonna do luxury stuff, you might as well make some cash flow on it. That's my opinion because it's depreciating fast. But with them, like you said, they can make it depreciate even faster by messing it up. They can literally make it depreciate even faster by messing it up. So
Yeah.
You just have to be more diligent, I guess. You just got to be more diligent. I don't know because you're pretty much doing it off of good faith. They think they can they live high value when they're leasing. Well, leasing does have its perks. You can be able to write it off on your taxes, but you got to be a business, meaning that you got to buy the car or lease the car under your LLC, not your personal, and have to write off every single gas mileage and lease payments and write off the depreciation. That's how you can win when it comes to leasing. But if you're not doing that, that's why becoming a business is better. You got to put everything on your LLC, do business with your LLC. When it comes to vehicles, they are asset, but they're a depreciating asset. So writing off the depreciation, your lease payments, and getting some type of rental income is my mind. Especially when somebody can get an auto primary. To be honest, a lot of them be balling on Section 8 South because they got a CPN. They're literally taking the CPN money and just balling out where they got an $80,000 primary with $50,000 in credit cards while still beyond Section 8. Yes. So,
Hey, real, I'm gonna jump down.
you gotta. I'm about to get off anyway.
Okay.
I'm about to get off anyway, so respect.
Thanks for letting me come up. Like I said, I'll catch you when you going live again. You there?
I'll go to live tomorrow after I'm done talking to my morning clients. So yeah.
Okay. No, I'll be looking for it.
Tomorrow. Around tomorrow after I'm done talking to my morning clients. All right, no problem. Respect to you, Renaissance. Okay. Peace. Okay. If anybody else wants to come up, they could be able to come up. Matter of fact, if anybody wants my email, I see somebody in the chat that that needs my info. So Credit Builder 475 and Business Development 1304 at gmail.com. So that's access to my email. For anybody that would like to come up before I close it, they can be able to join in, click the link. Anybody that wants to donate, Mr. Perfect 23G is my Cash App. If anybody wants to come on, please come up. If anybody has any type of questions. Any type of questions? Okay, no problem. Do I open the LLC first, then I talk to the guy in Brooklyn about the funds? Well, I want you to be able to create a high ticket drop shipping store, Sal, but you are doing the Amazon thing. You chose to do the Amazon thing, so we can be able to do something when it comes to that, man. You gotta make up your mind because you're doing the sourcing agent thing. So if you're gonna do the sourcing agent thing, it's either gonna do Walmart or Amazon FBA. But if you're gonna do phones, you don't have. I would say wait on the phones because the phones is gonna take a bigger investment. You're probably gonna need about $5,000-$6,000 roughly. $5,000 to $6,000 roughly. Oh, okay, I'll give you the link. You're gonna need about $5,000-$6,000 roughly. If you're gonna take $5,000-$6,000, you might as well create 2 or 3 high ticket drop shipping stores selling a product that's $1,400 or $500. Sell you some grass grills because it's summertime. People are gonna be grilling from July, August, September. Or if you got a couple $1,000, you need to get with my man about the credit funding. So that's why I saw if you got $1,000, you can get the credit funding deal, get you the credit repair situation set up, and be able to get some business capital credit funding because you gotta leverage credit when it comes to this. Because with the phones, it's gonna be a larger investment. With e-commerce, you can literally take other people's money off of capturing transactions using PayPal, Stripe, or Shopify payments and use the customer's money to pay for the inventory. Use the remaining money for more marketing budget, $50 in marketing budget. Okay.
Hey, what's going on? Can you hear me? You can hear me?
Yeah, I can hear you.
Okay. Yeah.
You're kind of low.
I'm low? Okay. One moment.
And I can hear feedback, so give you some time.
All right. Trying to get this. All right. So, can you hear me? Wait. Can you hear me now? Can you try to hear me now?
You're still rather low.
Oh my God. Hold on.
Low with feedback. I'm sorry. So, okay. Gotta mute you real quick. Mute real quick. But
How's it now? How's it right now?
you're still low.
Oh boy. Oh.
And I still hear feedback.
I hope I put the volume. I hope the volume's up. No, it's not up.
It's
Not. I'm sorry.
still low. It's still relatively low.
Yeah.
Well, you have my personal contact info.
Yeah. All right.
Okay.
All right. Well, thank you.
Okay. Nothing personal,
No,
but it's extremely low.
Yeah, I understand. I'll adjust it. Thank you.
Respectfully, have a nice day. Respect to you, have a nice day. So we going to close this one out. thank you for everyone that was tuning in, people that was checking in, people that liked the video. I respect everybody. I'm gonna be able to close this one out. Hope everybody learned something new today. Let me go over the ticketers real quick. So APYP. I need to research APYP. NUUU CLOV EENF, that's oil play. So EEENF, that's oil play. BRLL, that's another oil play. Mergers and acquisitions, y'all. Look for stuff that's pink current. Look for stuff that has ability to get some funding towards the corporation. Always to look for some good news when it comes to certain things. Look at a catalyst charts, FDA catalyst charts. So with anybody that wants to get the most return on profits, that's somewhat timeable, you can do biotech stocks and do the FDA catalyst and get in certain plays. And if somebody wants to get involved with a moonshotting type of stock, potentially a AMC GME, look at a study and a strategy called Gamma Squeeze, short interest. Gamma Squeeze is pretty much the method of where the stock can blow up over 100% in one day. You know, you have gamma squeezes, you have short interest, that's 40%. It could potentially go up like AMC. But the stock ticker is APYP NUUU CLOV. Two oil and gas plays, triple ENF BRLL. So that's pretty much oil and gas plays. With all these shortages happening, pretty much they benefit the most. So shipping stocks as well. So you got ticket or ship. So that'd be SHIP. So the ticketer is pretty much shipping. Shipping is up 50%. Well, the whole industry is up 50% of this month. And that's because the transportation is needed. Recovery and demand of certain stuff and supplies. So warehousing, trucking, shipping, they all interconnected. So those stocks, you can't go wrong. Get involved in them. Fixed dollar cost averaging. Do not overexpose yourself. Always make sure that there's enough set asides so you don't overexpose yourself in the market. So for anybody who wants to get in contact with me, my email is in the chat. For anybody who wants to donate, Mr. Perfect 23G. No period. No period. Mr. Perfect 23G. If anybody needs a free stock list, before you even book a consultation, everybody gets a free stock list. I put in 3 free stock lists and get you in contact with 2 people that can get you approved for grants and funding. So Sal, if you really want to utilize something, utilize the grants information, because I gave you information of both Courtney, Denise, and shout out to Denise Gonzalez. She's a contributor. And another person in Valerie when it comes to business grants. Get you approved for business grants. You can get approved for personal, where the only time you got to pay is when you get approved, and business grants where you can be able to get grant funding for your LLC. So people need to get in contact with those who you get in contact through me. People need to get ready for at least getting some fourth quarter sales, because there's Christmas sales is going to be out of the roof this year. It's probably going to break last year's sales. So you gotta get those sales, gotta capture those transactions, gotta benefit off of everything. So that's my email. My email is down in the chat for anybody that needs to get in contact with me. Definitely could be able to help you. My email is down in the chat. And I'm out of here. RDF out. Respect to everybody. Hope everybody have a blessed, productive day. And see y'all guys tomorrow.